Well, it turns out that you have to unmute the microphone in order to be heard. So let's try this again. Good evening. My name's Scott Allen. I'm here to talk about what else other than the greatest transfer of wealth in history of the stock market. The greatest transfer of wealth. I find that interesting because it is a great transfer of wealth. And I really want to figure out how to calculate the total transfer of wealth that has been happening for over a year at this point. Oh, I'm talking about this transfer of wealth, of course. This one. Wait for it. This one. So we have a situation where basically anybody who bought this stock between June and December of last year, with a few exceptions in December, okay? Obviously nothing's absolute. So there are some exceptions here. Here, right? There are some exceptions there. But otherwise, anybody who bought this stock from June to December of last year, I actually did that backwards, didn't I? They're underwater. That's interesting to me. That's very interesting. And as we can see on this volume profile chart here, let's get it lined up. Let's get it lined up. That works. You know what? We'll give a couple days in May, but really, it's from here. But who's counting? There was a lot of volume up here. So anyway, yes. Hello, Manuel. My good friend Manuel Fernandez and Model 3 Dude is in the house. Always in the house. Always in the house. And, yeah. It is the greatest transfer of wealth from the poor to the rich. You got it. You win the prize. whatever that is. I don't have a price. Although I should, because this is also a situation, a much better one, I guess. But we are. Last time I was on here was Sunday evening, I think, for the futures. And what a roller coaster ride it's been since then, right? I think we had 91 subscribers then. Currently, it says 115, so that's pretty cool. On our way, about a third of the way, clawing back to where we were before. But, maybe it was a good thing, because now I have, you find, it's like that country song. You find out who your friends are when your channel gets deleted. You find out who your friends are. You find out who your friends are. You kill somebody in the middle of the night. You need to hide the body. You find out who your friends are. That's not really in the song, but it should be. Anyway, it's Tuesday, man. Just trying to get through this week. Yeah. So here's the transfer of wealth. So AMC, to quote Big Man when he speaks, this play is not going nowhere. This play, AMC, not going to the motherfucking moon. AMC going to the ground. Okay. Anyway, so this is, just objectively speaking, like, this is a cool ass candlestick today, and it's unique. Pretty much. I mean, there's one here. It's kind of rare in this. There's kind of one here, but it's not the same. Yeah, that one there. This one. Oops. And this other little one here, but this one still is unique. It's bigger. It's cooler. It's pretty cool. Now, I don't think most people would, are probably not going to agree with me on that. Maybe the guys in the chat. But speaking of dead cats, my cat is not dead. He's probably hungry. So I may have to dip out and feed him in just a few minutes here. We'll see. We'll see. Maybe. So anyway, this candlestick. I don't know why. I always found it funny when people refer to these as candlesticks, but I guess that's what they are. I always say candles, but candlestick kind of sounds cool. This candlestick is interesting, and also something that we talk about here that doesn't get talked about much, I don't think. Now, I don't view everything that everybody puts out, but talking about, speak of dead cats, but I'm not really aware of a lot of really meaningful volume analysis. So yeah, we're looking at the volume, and there was a discussion in the Telegram chat, which, by the way, if you're not a member, you should be. Go ahead and join. Links in the description. It's on the Telegram platform, mainly because I hate Discord. but I do have a Discord as well that I'm trying to work on. I don't know a lot about it. The guy who was promised he would do it now is off selling NFTs to the apes, which admittedly is more lucrative. It's much more of a fruitful endeavor, I'm sure, than this. We might be on the right side of the AMC trade, ultimately, but we are on the wrong side of the AMC hype, that is for sure. So, anyway, join the finance chat on Telegram. Telegram's actually a pretty good platform. I like it. It's not the same, obviously, as Discord, but again, maybe that's a filter. You find out who your friends are. They're willing to download Telegram. Hey, do you have Telegram? No. Oh, okay. Okay, you don't have it, right? Okay. Could you get it? Is it really that big a deal? Actually, it's open source. The platform, so there are plenty of open source, non-official, I guess, third-party clients for it, which is kind of neat. There are Linux clients. I used it on Debian, a Debian distro once, and it worked pretty good. Anyway, so that chat is a regular text chat, but there is also a voice chat, which is currently patched into this live stream. So if you were so inclined, you could join that voice chat and come in here and actually talk to me. So I want to put that out there as well. So that could happen. That could happen. Will it? I don't know. It would be cool. It would be cool. So yeah, if you want to join that, come in, talk to me, be on the live stream. You just have to promise to go easy on me. I did work all day today, and I made a little money in the market, but go easy on me, apes. If you join the finance chat and come in the voice channel and talk to me on stream. Anyway, this candlestick here, I took it off, but there is a 200 period moving average that basically comes down like this, basically. And I could actually put the average on, but you have to just imagine it. Where did it go? Yeah. So this 200 period moving average is somewhere around there. It's probably lower than that. It's like here, I think. So yeah, it's a solid rejection. So that's not good. And then when you look at the volume profile, say of this area right here, let me get this off here, my off-brand 200 period moving average. There's a lot of resistance in this region here, and you can see that all this consolidation bullshit here in this area, all these people that are, like I said before, this is the underwater crowd. So now it's interesting if you look on Reddit, which is just it's really special today. Let me tell you, it's special over there. But if you look over here, you see about 72 to 84% of people there swear that they're profitable, that they are sitting on a profit right now. I don't know statistically that that's possible, although there is less than 500,000 followers or subscribers to this subreddit, AMC stocks. So maybe it's not a good representation, but I doubt that I don't know. Seems like a lot of the people that would claim that they're profitable, probably full of shit. I was watching some George Carlin earlier, and I want to play the clip, but I know that probably will go too off topic, and I'll probably get kicked off of YouTube for pirating that. So anyway, yeah, not a great candlestick, but cool candlestick, a unique candlestick. I like it. Volume, we were talking about this earlier. Okay, so this is interesting. You come over to, when we come over here, when we come over to this page, what page is it, Short the VIX? I'll show you. Orders by Fidelity customers. So this is kind of like our proxy for retail. The more informed faction of retail, less of the brain dead retail crowd. As Maverick of Wall Street says, the Robinhoodiots. Robinhood idiots. Robinhoodiots. I use Robinhood too. It's the only thing I can use when I'm at work to trade options. So, but over here, let me refresh this. I think I just did. So we actually have AMC as the number one stock today, with slightly more sell orders than buy orders. And as I always say, you don't know how many shares are in each of these orders. So it could go either way. So, but the number of orders, the number of trades, selling outweighing buys, which usually is not the case. Usually it's not the case. Yesterday, I don't believe it was. You see the same thing with GameStop, higher margin there, but not with Wyckoff Mining. Not with Wyckoff, and what was the other? I mean, those are it, right? Where's Bed Bath? It's not even on here. Robinhood, more selling than buying. Not surprised there. MULN, more buying. Anyway, so there's that. Now, again, on Reddit, you see, no apes are selling, yada, yada, yada. Okay, all right. Clearly, maybe they're not apes, though. Maybe they're not apes. But then that calls into question the 4.1 million retail apes holding AMC. Not all people trading this, holding it, whatever, are apes. So yeah, clearly people are selling it. They've been selling it. And that brings me to the next thing, which is the trading halt, right? So in order to get into this, we'll come to Reddit, because why not? So I thought this was pretty funny, or I don't know. So unusual whales, which, man, it's crazy how popular unusual whales has gotten. I heard him on a space call with Mark Cohodes once. This is last year, October, November, somewhere around there, maybe August or September, somewhere around there. Kind of an idiot, not really. Yeah, you had to hear the space call. You had to hear the questioning. Anyway, earlier today, GME and AMC was halted. Numerous brokers, right before the halt and the morning spike, reported that far out of the money chains, 300 strikes and onward, were in the money. More broker issues? So, numerous brokers. And this is like every sentence in here, or near sentence, is like weird, like, to me. But anyway, earlier today, GameStop and AMC were halted. Numerous brokers, right before the halt in the morning spike, the halt in the morning spike, the spike, reported that far out of the money chains, 300 strikes and onward, so clearly that's talking about GameStop, were in the money. Numerous brokers. So then we go to the next one. Robinhood. GameStop option in the money. Your GME 315.41 call is in the money. I wish I knew what time this screenshot was from. Can we discern that anyway? 9:49, and it was 1 hour. Wait, what? Maybe it's a different time zone. Maybe it's not Eastern time. But Robinhood, and it's only on GameStop on this one. Okay, so then this one, and you may hear the trains out there. I don't know if that comes through or not, but again, now it doesn't say Robinhood here, but these are Robinhood notifications. They're the same style as these. It's got a little money bag. You know, it's the same. It's Robinhood. So Robinhood again, only on GameStop, and that's it. That's all we have. So we have a tweet from Unusual Whales that intimates GME and AMC. Then we have the actual proof that we have, the evidence, the supporting information. Not only is it not AMC, it's one broker and not numerous brokers. So yeah, Unusual Whales, kind of a typical idiot, in my opinion. But that's just based on what proof is given here. So anyway, so that's about the halt. But we'll get to the actual thing here. So somehow this explains the halt. They were halted because far out of the money chains. Who even talks like so here we get an ape explanation of it. I went mute again. What is going? We can't hear. Shit. Okay, let's try this. Let's see. Okay, let's try this. Oh, okay, it's back. Man, what is going on? That's the second time that's happened. And it's doing it again already. What the f... All right. Shit. Oh. Okay. Well, let me figure this out, and I will be right back. I'm gonna put this. Oh, okay. Maybe not. I'm gonna turn some music up just so I can check the audio. I will be right back. So maybe what happened was, this is probably what happened. I probably hit the mute on the microphone because I'm prone to do that sometimes. I probably hit that. I'll try to not to do that. And let me get this back. So that's probably what happened. Earlier I had issues with my audio driver or something like that, and I was having more of a more of an issue on the streaming side. But yeah, let me know if this is a problem again, and I will be cognizant of the mute button. It's on the cord of my mic. So, but yeah, the stock was robbed again of its momentum by the exchange. So this is pretty great. We were definitely robbed of our momentum yet again for a potential short squeeze. This time they can't use as an excuse to cover their manipulation any shares being sold by our company's CEO or any news. The stock had a bullish behavior, and the price was increasing sufficiently high at a fast enough pace to be deemed as the beginning of a squeeze. And the exchanges went and halted the two most popular stocks in the market. This is not to be dismissed as, quote, this is what happens in the market, or, quote, this is regular price behavior. It is not. We have followed the market long enough already to not be gaslighted or talked down to by fake hedge fund shill accounts that dismiss the obvious as a mere daily response in the stock. There was a halt, and it killed the momentum. And we need to address this matter so the potential buyer understand that no one is selling. And, we just have every hedge fund and the SEC betting against us. Not financial advice, just some clarity in the middle of all these smoke screens. So this is, I think even Lou versus Wall Street has said that, you're going to see halts in the trading of this if it goes down the way you think it's going to go down. I wonder if that means that this person wasn't around last June. You think maybe? I forget how many times AMC was halted. I honestly forget. I've tried to forget all that. I've tried to forget that day and what happened. And I was actually on a job I actually went to a job interview that day. and my girlfriend was sitting here watching it, and I was like, "Let me know." Anyway, trying to block those memories, not really, but it was halted a few times. So yeah, it would get halted. It doesn't take that much to get it halted. So, it doesn't take that much to get it halted. So this is the limit up, limit down, luldplan.com, which is weird that it has its own website, but it does. Talks about the plan, when it was implemented, who the participants are, which are all the exchanges, the purpose and everything. So, and then it goes over which securities are covered, which is NMS stocks, which is basically all of your NYSE and NASDAQ listed stocks. And then there are two tiers. Tier 1 is the larger, the S&P 500, Russell 1000, and ETFs. Tier 2 is all other NMS securities. Yada, yada, yada. Right. So the way it works is there are price bands. So it's essentially a limit up or limit down amount, that will cause the halt. And it talks more specifically about how the quote unquote reference price is calculated, but the reference price is calculated from eligible reported transactions, and they get this from the two SIPs, or Security Information Processors, like CTA, Consolidated Tape Association, and the NASDAQ UTP. I think that's Unified Tape Program. I don't know. So the SIP, so that's the official source of the price data. So it's from there that it gets reported, or it gets calculated, and so on. So you can read more about this. But here's a little example. Closing price $25, so you got your upper band and lower band, and it depends on the price of the stock, the closing price, and then obviously whether it's tier 1 or tier 2. And then you have the percentages here, and some more information here. So essentially, you know, if it goes up or down 10%, within a, what does it say? Over the prior 5-minute period. So everybody talks about how the squeeze is going to be fast and violent. Well, then you should be prepared for trading halts. That's just the reality, right? And I think that anybody who was involved in this last summer would probably know this. So, you know, does it rob the stock of its momentum? I think that's a bit dramatic. I think that's a bit overstating the case, right? That doesn't mean the stock price can't go up or down. It's just a bit of cool down, and then go for it again. But I want to look at this. I want to look at this too. So let's get that underwater period off there, and I'm checking myself every once in a while. Yeah, I just heard myself, so that's good. So let's go intraday. We'll go down to 1 minute. What the hell? So here it is. Oh, and also here's the courtesy of Manuel Fernandez. The NYSE trading halts, regulatory halts, the actual data that proves that there was indeed one on AMC. So, wish you could, okay, well, we can see it. 938, limit up, limit down, pause, resume time, 943, and then over here we see 938. Here's a blank candle, or a horizontal candle, line, whatever. Nothing there. Nothing there. And then the next candle is 943. So that's when it resumes. Yep. So, all right. So it's the previous it's a 5-minute period previous to this. So we're on 1 minute candles, 1, 2, 3, 4, 5 here. So that's what was being looked at to determine that. So let's see what the range is. And it's closing price, right? So that's the absolute range is just over $5, or just about 15%. So yeah, so Badback's saying halts are standard. These apes think everything is against them. Victim mentality. Victim mentality. Yep. 100% typical, uninformed. You know, again, if you really were looking at this last year when the shit hit the fan, you would know that. You would know to expect that, and you wouldn't get all, you know, emotionally hissy on Reddit. It's just, you know, clearly, you know, and why would you? I don't know. Yeah, it's. So there's 14% right there, in just in those 3 minutes. So, you know, it's. Let's go back here and see what it actually says for the reasoning. Okay. So let's say operation of price bands, but reports. I want like a broad. The plan is designed to prevent trades in NMS stocks from occurring outside specified price bands, which are set at a percentage level above and below the average reference price of a security over the preceding 5-minute period. The percentage level is determined by a security's designation as a Tier 1 or Tier 2, blah, blah, blah. So let's do a general search. I want it dumbed down even more. So it's not going to be, where's Investopedia when you need it, Circuit break. Oh, yes, of course, circuit breaker. That's on the index. Oh, here we go. Okay. So what is a circuit breaker? I mean, it's a good analogy. An emergency use regulatory measure that temporarily halts trading on an exchange. Circuit breaker is an attempt to curb in panic selling and can also be triggered on the way up with manic buying. They are commonly used for individual securities as well as broad market indexes like the S&P 500. Circuit breakers function automatically by stopping trading when prices hit predefined levels in exchanges around the world. Okay. And first came into use in 1987. Circuit breaker functions in the trading world the same way it does for electrical circuits in a home. When things get overloaded, it kicks in and shuts down the circuit. So that makes sense. In trading, circuit breakers are emergency measures established by the market that shut down trading temporarily or for the rest of the trading day when market prices drop significantly or rise, but in our case, in the case of our market. Unlike their market-wide counterparts, circuit breakers for individual securities are triggered whether the price moves up or down. So that's the limit up, limit down. ETFs are treated as individual securities. Special considerations. So, now I thought I just heard somebody. Who is that? No? That was weird. I heard something. But there's nobody there in the chat. Anyway, so right. First put into place following the market crash in 87, the flash crash. Criticism of circuit breakers. Some analysts believe that circuit breakers are disruptive and keep the market artificially volatile because they cause orders to build at the limit level and decrease liquidity. Critics of circuit breakers argue that if the market were allowed to move freely without any halts, they would settle into a more consistent equilibrium. So it's interesting here that they're citing analysts who believe the circuit breakers are disruptive and keep the market artificially volatile. Artificially volatile because they allow orders to build at the limit level and decrease liquidity. So let's see. Options, yes. Okay. And then we have trading halt. Well, we know what this is, and we know what this is. So trading halt is a trading halt could be more general. Could be if you go on this page, you see a news pending trading halt. So a limit up, limit down, pause. So these are different types of halts or reasons. Regulatory concern. This is for Russian ETFs. So that's a halt. Remember when Evergrande was quote unquote halted, or what did Boss Blunt say? Delisted, right? That was a trading halt. So there are different types of trading halts. Circuit breaker or limit up, limit down is a type here. And, you know, we saw in the last Investopedia, the history of it was to prevent really to the downside. And indeed, that's what you see here. That's what you see here, okay? The 15%, which direction is it in? It's to the downside. So why is this person even, what is the beef? It stopped it from going lower. It stopped it from going lower. It was on its way down when it was halted. So as Badback says here, they don't understand how the market works. I love how people who don't even know or understand the workings of something are the ones yelling it's unfair and needs to change. And that is exactly the personification of the Dunning-Kruger effect, as far as I can tell. So here it is. Here it is. I think this one might be better, or maybe it's this one. All of these are good, but so you have, let's just get one of them. Care which. Oh my God. So you have confidence on the y-axis from low to high, and then competence on the x-axis from know nothing to guru. So when you are ignorant of something, when you know nothing, you have this high confidence level. You're on the peak of Mount Stupid, because you don't know what you don't know. You know, like this is sometimes people who are in this phase might say that they have like beginner's luck or something like that, dumb luck, right? Oh, I made money on my GameStop calls. You know, I know what I'm doing in the stock market. I'm an investor. I'm a skilled trader. On that first dumb luck or beginner's luck, and then the next time, or statistically, maybe at least one in the next 3 times, you lose fucking hard. Like you just crash and burn, blow up your account or whatever. You lose. And then you sink to this valley of despair, and your confidence goes lower, and then you ultimately climb the slope of enlightenment. As you actually learn and improve, and your confidence rises consummate to the amount of knowledge and skill that you have. So then you get to this plateau of sustainability where hopefully, you can make a profit 51% of the time. That's my goal. So, yeah, but the thing is though, I feel like now, and maybe this is just because of the endless waves of people that have to be coming into this. I mean, obviously there's people that are long term, but I think like any cult or cult-like organization, it depends on, especially MLMs, pyramid schemes, and scams like that. They depend on new blood. They depend on new people coming in. And the new people, by definition, know nothing. They know nothing about this whole thing. So they start up here again. So you have this like this mountain range of Mount Stupid going on. Or they just never, I don't know. They never learn, it's wild. It's wild. I don't know how you can look at something every day at this level of detail and not just like inherently learn stuff. Like that doesn't make sense to me. But when you consider that, this is the kind of information this is considered a source, this person, and if you say not financial advice, that gives you some credibility because you're not like an insider or a hedgy or whatever. Like this person thinks that they can give some clarity. They unless they're a shill, which they very well could be. But most likely, let's say, probably not. It's probably just a normal ape. Wanda 007, nice name. They believe that they're helping here by saying this, and it really doesn't. It really doesn't. So, and it's not even market. It has nothing to do with the market. It's kind of just common sense. Like, I'm looking at this, and I happen to look at the chart of AMC at some point between 938 and 943, just once, and I didn't see the price moving. I didn't see the bar countdown over here on the right. So I was thinking, like, I wonder if this is just TradingView being a piece of shit, or if it's halted. And then I found out later it was halted. But yeah, I mean, obviously, I saw that it was in this. It had these candles before it. So speaking of those candles, so that's dumb. Come on. Your momentum was halted. Your momentum was stopped. Yeah, the momentum to the motherfucking downside. That's what you're crying about because you wanted it to do this. You wanted it to keep going this way. You wanted it to keep doing that, right? I mean, that's what they're saying. Well, it would never go backwards like that, but you get the point. That was the momentum that was halted, if it even was. So this is like one of those shut the fuck up moments, really. It's absurd. Okay. But then, I saw, so here's another one, just dramatizing this. These drama queens blowing up on LinkedIn. Like, who fucking cares about LinkedIn, by the way, too? But it's blowing up on LinkedIn, guys. Oh my God. It's blowing up. It's blowing up on LinkedIn. It's blowing up on LinkedIn. Oh my God. The squeeze is fucking here. It's because it's blowing up on LinkedIn. That's Peter Hahn's platform of choice. So he must be legit, right? He's on LinkedIn. God. Okay. Blowing up on LinkedIn, the same damn thing. Aaron Abrams, retail trader, dumb money extraordinaire. Same one as it was before. So another scandal in the market with these far out of the money chains, like chains and whips. You're into chains and whips. Apparently, you're into punishing yourself if you're putting yourself through this crap every day. But the crime of the century on today's crime of the century. Today's crime of the century. Tomorrow, it'll be a different crime of the century. I mean, God. Good cause, 1537. They only got 3 medals, though, so that's weak. This one got like 10. So, but there's one other one I'm looking for. AMC GME Ape since December of 2020. I want to congratulate you. The best thing that ever happened to GME happened to you today. What? Okay, we were robbed of a short squeeze. I know, it's a short squeeze. This is a shorts squeeze play. Do not squeeze my shorts. They halted on the way down. Oh, look. Oh my God. So there's somebody here who is climbing the climbing the slope of enlightenment. Look, right before our eyes. They halted on the way down. A lot of you are making us all look ignorant. Halts are normal, and they didn't halt us on the way up. Be upset about the massive amounts of shorts that flooded in all at once. That is all. So the slope of enlightenment has some people on it. Let's hope they don't die on the slope of enlightenment, like on Mount Everest, because nobody's coming after them. I'm not. And then, you know, well, that was a lot of drama for an 11-cent price change. Is that what it was on the day? Oh, yeah, it was because it was that cool candlestick. That's right. Yeah. I mean, the thing that, and see, this is the problem. Like, why is it doing that? This is the problem they don't really think about. They think that the price was, you know, oh, that was a lot of trouble for 11 cents. Well, why does the price change in the first place? Like, this is basic market dynamics. And I always come back to this because it is basic, it's fundamental to the market itself. The stock market is an auction. It is an auction. You are auctioning. Buyers and sellers are coming together and agreeing on prices. Right? So, what moves the price of the stock? It's those prices that people agree to pay or to receive for the product. What changes the price of anything? Supply and demand, essentially. Now, it's a little bit more complicated than that, obviously, and there are a lot of inputs and outputs, a lot of ins, a lot of outs. It's complicated, but at the end of the day, that's what's going on, and it's not an auction like an antique auction or an estate auction with an auctioneer. It's all computerized, electronic, but every transaction is recorded. Every transaction is recorded on the tape, and you can go look at it. Even the dark pool trades, even those, you can go look at them. They're not, it's not. So, and actually, we looked at that on that one Weeble video about how we saw it. We saw it happening. We saw buying, we saw the price go up, we saw selling, we saw the price go down. So you can see it if you just have to look. You have to know. But once you know, then it makes more sense as to what this candle represents. Right? The price didn't change that much, but the wick on this candlestick wick, upper wick and lower wick, they're long. So there was a large range of trading on the stock, but it ultimately settled near where it started. So you had, and let's go to intraday real quick on like 30 minutes. And then I'll move on. We'll go to a video or something because I need to change the pace a little bit. So here you go. Okay, these are 30-minute candles now. 30-minute candlesticks now. And let me get back to 30-minute candlesticks. And I just want it to be today. So there we go. Well, in this 30-minute period, there's the long wick. So all that happened like in the second, basically in the first 30 minutes of trading, first of all. And then the rest of the day was fucking sideways. So maybe we could see it better on 15-minute candles. We could see it probably better on, any candle. 5 minutes, fine. all the way up and then all the way down. So here's the lift hill, and here's the, the plunge. And then the rest of the day was basically sideways. And then if we come down to 1 minute, bars. Okay. So this happened in 4 minutes, 4 minutes up, 4 minutes up, 3 minutes down, and then the halt. Right? So, again, why did this price go up? Well, because people were buying the stock. There was buy transactions, and you see over here, like, maybe we zoom in, put this over here so that we only see this in the volume profile. Maybe if we can do it. But this volume profile adjusts to whatever's visible here, so it's changing when I slide this around. So you can see in this period, which is like 15 minutes, the range where the transactions occurred, most of it happened down here at 29.60. That's what that faint white line represents, and you can see that that bar is the longest bar, but that was mostly selling there, overwhelmingly. So I'm just pointing out here that every transaction has a buyer and a seller, and the price at which the transaction occurs is determined by that. By what someone is willing to, we're going to match these limit orders with these limit orders. And it happens automatically, whereas before, back in the old, or if you go to an auction in person, you're going to interact with the market maker, if you will, so to speak. The auctioneer, that would be the market maker. But in this case, you just, push some buttons, and that, or if you watch anything that has like open outcry trading where you're shouting and using hand signals and all that stuff. But it's the same thing. Okay. So getting back to this candle, the 11 cents thing. Yeah. What does it mean? Well, I mean, these type of candles indicate like uncertainty, indecision, right? It could kind of go either way, maybe. Be a positive way of looking at it. But then when you look at the volume profile again here, it's kind of not surprising to me that this was able to break through yesterday, because you see there's lower volume at these levels between 22 and like 27. There actually was not a lot of trading that happened there. It was either above or below that area. So here, oops. Oh no. You hit spacebar by mistake in TradingView and everything goes to shit. It's ridiculous. Okay, so between here, like in here, the red lines, which are terrible, probably a bad color for it here, but I just want to point out that this one thing. Okay, between these lines, if you look, with the exception of that time in December again, so there's a little bit of it, but even these days, really, they just punched through it, and then they punched back out of it. So it punched down into this range, and then it fucked around a little bit there, but then it punched back out of it, and then it came down and like kind of dripped down through it again, and then went below it. So there's not, and then over here in May, it punched through it again. It went straight through it. It's like punching shear, like a punching shear um, when a building collapses. Okay, maybe more fitting of an analogy over here. But it just went through it like a diver diving into a pool. You want to be as thin like a pencil as you can and slip down into the water. This just slipped right through and then went above and then consolidated and did its thing. And then up here, like to continue the pool analogy, like this would be like doing a cannonball and it's splashing all over the place. There's a lot of price action that's like around it. It's noisy, we would say, right? It's like a cannonball. It's this big splash and splashing up and down and all this. Okay. So when we come back over here, this is cannonballs and then this is another dive. So, just comparing what happened here to this over here in May, this area, maybe the argument could be made, well, it's similar because it just shot up, oh, okay, but it's not though, because this candle here, this candlestick here, it's different. These candles are not the same pattern. Okay. Also, we have the benefit now of knowing that this did punch through. It did this dive through all these times, and it never really stayed there, which was always kind of weird. But the bigger point is once you get above that, there is a lot of consolidation. So I'm going to move the lines to here now. Move the lines to there. So now when you look at the volume profile, and I could bring it even down to here maybe. And you could maybe even bring it up to here. This whole area, look at how much more volume has been traded at those price levels as opposed to the area where it punched through. You see what I'm saying? So we're going to go back to the punch through. It's this area right here. That's a low volume node is what we call this. A low volume node. So let me center this on it. And now it's centered on that low volume node. And then by contrast, up here we have let me just do it this way. Up here we have a high volume node. High volume node. Okay. So, all this is just to say it's going to be a tough time getting any higher than this, probably. Especially when you see this. All this selling by retail investors on this stock. So that's kind of my take on the chart and this wonderful candlestick that we have here. Model 3 dude saying, what made them think they would not have to pay for the upside move? And that's a good question. Because they've been buying options the whole time, and I think it dropped off a little bit like the beginning of the year or after January probably. So February, I guess just February, because January had a lot. There were a lot that were on the books from before though. But yeah, I mean, it's like you want somebody else to do the buying. And that's always kind of been part of this. Like, yeah, people say and they're buying, they say that they're buying 20 more shares or whatever, which at the end of the day, it doesn't matter. It's nobody's, it shouldn't make a difference to what, if you're investing or trading based on something, but this is a collective thing. It's a social thing. It's, a delusional thing, I think we would say. But at the end of the day, it's the ultimate like pass the buck thing. It's the ultimate like pass the buck. Not only do they blame everybody for, the stock not going the way they want it to, or that they've predicted this whole time. They also, I don't think they can. I don't think they could if they wanted to at this point, because of everything. And there are a lot of things that go into that everything in terms of how it's different now than it was last January, last June. So there's that. So you want somebody else to buy the stock because you can't or won't or whatever. Yeah, I mean, and then, just going a little bit into the future, it's probably going to be, and it already has been. You're starting to see some very extreme things now, like we saw last year, even people threatening violence, and towards themselves or others, and that's shifting the blame too. You have to take responsibility for your actions, and if that includes having made a mistake, which as a human it does include a lot of that, then you have to just own up to it and either move on or change what you're doing or whatever. Listen to somebody like me or the people in the chat here, and that have maybe a little bit more experience. And it's not even about an ego thing. I don't think it's not, certainly not for me, and I know it's not for the folks that are regularly engaging with me on this stuff. We find it fascinating, and on some level it's it's just something that people something that people have to go through. Certain types of people who are maybe more predisposed to think certain ways or believe certain things, certain types of things. I'm trying to be very diplomatic in that, but because it's not really political. This spans all political sides. It spans all socioeconomic, seemingly, divisions. It's mostly male, mostly dudes. Because I think, well, I'm not even going to get into that. And it spans a large range of ages, although it is mostly younger people, because they have less experience. They're more easily impressionable, and all these things. So you have it really is like an only now kind of thing. It really is, I think, and that's why it's fascinating to me. But at the end of the day, it is about common sense, especially if you touch the stove once. Okay, you touch the stove once, are you going to touch the stove again? And that's really kind of what it comes down to for a lot of this, like the Dunning-Kruger curve is. The peak of Mount Stupid happens to be when the confidence is highest. So that's and like I said, this is when you have beginner's luck, dumb luck, whatever you want to call it. This is when Astro made a lot of money on GameStop calls, right? But I don't know that the slope of enlightenment was ever attempted on a lot of these things. So anyway, yeah, it's about common sense. Speaking of common sense, let's go over here. So, summary about the chart discussion. Yeah, good luck there. It's never been about fundamentals anyway. So, technical analysis, whatever. Okay. So, just looking through these titles here, stimulate and trade. Holy cow, warning signs are all over Wall Street going off. Oh, okay. Shocking. Removing the buy button again for AMC stock. Oh, that's clickbait. That's Such clickbait. Oh my God, they are removing the buy button again for AMC stock. From who? Trading 212? AMC, we're just getting started. Okay. AMC hit $34 before halts. But you know what, Jack? You know what, Jack? Okay. Look at Jack. Jack Hunter on the fucking clickbait train, of course. That's all he is anymore. And he's nasty about it. He's not a nice guy. He's not a nice dude. Like, people say that I'm an asshole. People say that, I'm mean, whatever. But at the end of the day, think about it. I'm not taking money from anybody. I'm not getting paid to do this. I'm basically volunteering. And would I do it if I didn't feel compelled to somehow? I don't want to use the H word, but because this is fucked up. What these people are saying is wrong, and it's fucked up. And look, on Sunday, we looked at short the VIX. Look at this title today. AMC stock, shorts have a giant problem. A giant problem. Really, they have a giant problem. But back to Jack. AMC hit $34 before they halted the stock, before the halt. Okay, that's true. But you know what? It also plunged, and this is just the plunge, and I'm going to do the whole plunge before the halt. It also plunged 15.25% before the halt. So, way to cherry pick. Shorts have a giant problem. AMC stock price $1,000. MULN confirmed. I thought this guy was reasonable. I thought this guy was evidence-based. I mean, obviously he's feeling the tickle of being, in the spotlight of this AMC grift, right? He's feeling the tickle. And so he's like, oh, $1,000. Let me clickbait. Oh, let me catch up here on this. Lou fans are turning against him. Some believe he's been compromised. Really? Like Model 3 Dude said before, he fully understood what it meant to take profits after blowing up the account for the second time. I don't mean to laugh at you. But I guess I am laughing. But you learned from that, and I'm not going to sit here and say that I haven't passed up opportunities that I should have taken. I did it today, not on AMC, but it is hard. So any way that you can learn that, and that's why I trade in an account with money that, small amounts that I can afford to lose. I don't want to lose it. I want to make money, and sometimes I do. Sometimes I don't. But I artificially limit what I can lose, because it's like going to the casino and they have an ATM machine there. That's crazy, and it's super easy to just do another deposit on your account. So yeah, that's good though. I mean, failing is succeeding. That's one thing I've learned in almost 40 years. Is that the times that you screw up, those are the best moments of learning, and the bigger the problem, the bigger the opportunity, kind of thing. And you need to fail. You have to fail in order to get better. So, and in that way, you can flip it in your head to actually appreciate when you lose and fuck up, because if you do it right, if you fail the wrong way, if you fail the right way, if you use it the right way, then, yeah, you will learn things like to take profits after blowing up your account, and then the next time it happens, if you're me, you might still do it, but you might not do it, but you might have wanted to, but you hesitated enough to remember or something. I don't know, but yeah. And Manuel's talking. Lou now acknowledges retail does not own the float. I saw that video up there. Still believe AMC owns the float, or retail owns the float. I mean, but we've been saying this. We have been saying this for a long time. We've been saying it for a long time. Like it's holding at 54.3. I don't know how often this is updated, really. But but see, the thing is, though, they believe that that the retail apes, not only do they own the float, not only that, which is not, it cannot be true. Like, there's data on ownership based on filings that are legally required to be filed. So, based on that, the thing that has no proof, the thing that is 100% a rumor, started, I guess, by the CEO, which is even more fucked up. The CEO who invested in a gold mine. I'm going to go with the data. I'm going to go with shit that we can prove. And if it's wrong, well, then that's fucked up. Okay? And that would be a different thing. But we have no reason to believe that. So, but not only that, not only do they own the float, they own the float several times over because of the naked shorts. Which, you want to talk about data. The data, here's the data. Apes have bought into a narrative that requires the belief in facts that do not exist, never have existed, are made up. That is the actual reality here. And that's fucking crazy. That is crazy. So, yeah, but mine would be still believe AMC retail owns the float 6 times over, because that's what they believe. That's what they believe. But, I go with the data. Data could be wrong, yes. But if you have a process, and this is the thing, I don't know, there's a their YouTube channel, SMB Capital, and they have a lot of option trading videos and market and trading videos and things. And, there's some really good stuff in there. And one of the founders, Mike, they're a prop trading firm, and he has a book called One Great Trade. And it's his philosophy on trading. And, one great trade doesn't mean that you made a lot of money in the trade. You could lose money. It could still be a great trade. So the idea is you have a plan. You have a sound idea, and you execute it. You executed your plan well. The market can do anything. The market can do whatever. In fact, I saw a simulation earlier on a show where they were doing a mock option trading, and the idea was, okay, you have $100,000 trading this one security. We don't know what the price is of the security, but we know you can buy and sell options, and at the end of the exercise, we'll roll the dice, And that will be the price of the security that you were trading options on. And will you make money? You didn't even know what the price was. You didn't know what it was going to be. And it's still possible to make money. So that was, you know, that kind of stuff is interesting. And because it becomes a lot more about strategy rather than trying to pick which way it's going to go. But so I just mentioned that to say the price could be random. It could be random. It might be random. It doesn't really matter. You know, that part of the equation is sort of out of your hands in a lot of ways. So, but with this narrative, they try to control the thing that's uncontrollable in a way, you know, and rather than being good at reacting very quickly to whatever the thing that's out of your hands ends up being. And that's what it is. So you could, the thing out of your hands could go totally off base, and you know, you had a good idea, and if it had done kind of what you thought it was going to do, it would have been good. You would have made money. So that's one good trade. I would recommend checking it out. Also, the channel is, well, I'll get it in a second here, but these are not one good trades. These are infinite bad trades. AMC stock price prediction for tomorrow. Spring loaded. Spring loaded. Spring loaded. Here's what should have happened based on the rules. Yeah, so you can sit around and talk about what should have happened and your interpretation of the rules. You know, I don't know if I want to watch that video. I'm kind of getting curious though. I can't lie. But you cannot say what should happen. You can say what you think might happen or what you want to happen or your bias. But to say, here's what should have happened, no, Jeff, no. Here's what should have happened, okay? But that didn't happen. And the market is going to do what the market is going to do. And, you know, we've been talking about this lately, too. The idea of the market pre-pricing all information. So, and I extend that to, okay, look, you guys are expecting something. Jeff Forbes even knows what should have happened. So why didn't it happen? And that's the point. That is the point. Whatever you think the market should do, it probably won't happen. It might happen. It might happen, especially in this type of scenario. You might happen upon a $100 bill on the ground, on the somewhere out in the world randomly. You might find just come upon a $100 bill on the ground. Are you going to do that 3 times in your life? Is that likely to happen? Probably not. Probably not. So, yeah, maybe, yeah, fuck it. I want to know what Jeff thinks should have happened.
What's going on, everybody? It's Jeff here. Welcome back to the channel. AMC ending the day green, just barely. But in this video, we need to talk about the blatant manipulation that occurred this morning. And I'm not talking solely about the fact that they halted AMC. I'm talking about the events and the minutes.
They halted it. They halted it. How dare they halt it?
Before
stopping those massive gains. Oh, wait a minute. No.
Why it was complete manipulation and how actually algorithms completely took advantage of this. I'm going to break everything down for you, give you my thesis behind it. Let's get right into it. First off, let's take a look at AMC. It held $28 level of support very well. Volume started to rise going into market open. As soon as we opened at $30.09, we're getting $4 move to the upside. back into that level of resistance that I'd mentioned in yesterday's video, around that 33.90 area.
That same level that we talked about over there, where the above where the price punched through. So that area, this high node, high volume node here, essentially. And he's saying 34, whatever. You know, it's not an exact number. It's never an exact number because prices slide around a lot. They wiggle. So anyway, that's he's talking about the same area of resistance.
A little bit of rejection, which was normal, especially with that quick of a move to the upside, followed by a downside halt. When I saw AMC moving like this, and then I got an alert saying I had a downside halt, I was completely taken back. And before I explain to you exactly why, I want to share with everybody just what a stock halt is and how it works.
Okay, we looked at this too.
A single stock halt occurs, all right, when the price moves in either direction 10% or more within 5 minutes. All right, now a downside halt generally is there to protect you and the entire market. You also have circuit breaker halts when the entire stock market moves 7%. All right, and it is really to prevent another Black Monday, especially if you do have a lot of stop losses set. I mean, a stock can literally drop down 50% in the matter of a minute, and your equity could just be completely wiped out. So it is designed to protect investors. And there are times I have been stuck in downside halts. I immediately get out of them when they open up, and it probably did save me a few bucks. However, to the upside, it actually does halt buying pressure to an extent. And I'm going to explain that in just a minute. Okay. But keep that in mind. 10%
He kind of has a Dave Portnoy vibe right now. It's weird. Like I'm looking at him, and he's not talking like Dave Portnoy, but maybe it's his glasses. I don't know. Weird. I'm probably tired.
Within 5 minutes. Now, here's where my problem lies. I said to everybody just a minute ago that we opened up at $30.09. If you look at that first candle, it says open 30.09. And if I drag my clicker from that 30.09 level and I go within 5 minutes, which is exactly where we are, you can see on my screen, 5 bars, it says 4 minutes, but that's the difference between, but 5 bars, 5 minutes, I am at $34 even, and we've already moved 13% from the open, but there was no upside halt. So why was there no up?
Oh my God. Look, listen to this whataboutism here. This is the strangest whataboutism I've ever encountered. Well, we had a downside halt, but what about this? There was no upside halt. What a strange argument. I'm curious where he's going with that. I am. Let's look at it. Let's take a look at it. Just look at it. Usually you can figure it out if you look at it. That's all I ever do is look at it. All I ever do. Okay. So he's taking it to the high. Is he taking it to the close of the candle? We got to check that. Remember, it's based on closing prices. Will it snap? I think it's snapping. It is snapping. Okay, 13.74. Okay, the next thing is, remember, there's all this gobbledygook in here, for lack of a better term, about which transactions, remember, it's eligible reported transactions, and the first reference price is either the primary market's opening price or the primary market's previous day closing price. So obviously that's going to be the opening price, I believe, because close was it close lower? Yeah, I think it was. Yes. Okay. All right. The reference price is updated after 30 seconds only if a new reference price would be at least 1% away from the current reference price. So there, now we have something else. So reference prices can only move by 1% within a 30-second period, right? Reference price is updated after 30 seconds only if a new reference price would be at least 1% away. So it's a 30-second resolution on this. Reference price would be updated in 30-second intervals, and it has to be at least 1% away from the current reference price. So I'm not going to go through it because it's already getting, sticky. But somebody could. You could go through and see what the reference prices were, and the one within 30 seconds. You could go down to 30 seconds and see if the moves are 1% in that time. So you have 8 or 10 reference prices in there. But so my kind of knee-jerk reaction there is there's probably a reason, but let's go on.
Upside halt, but there was a downside halt. And I know here's where things change, okay? I've been investing in stocks long enough that a couple things occurred. One, whenever there is an initial halt, when I get an alert for it, I always go into that stock, okay? Two, there are algorithms that specifically track halt bands. They know when a stock is moving, what that price point is, okay, in a 10% range within 5 minutes. And a lot of times when I am trading a momentum
it's more
stock,
complicated
a buyout,
than that, really.
Play a low cap, small float, whatever, you can see the time and sales in the tape on the right hand side. And whatever that halt band is, let's say it would have been 33.53. All of a sudden, as soon as we hit that and we halt, you see the massive green coming right in because the algorithms all get in before. And immediately after that, there is a limit sell at the pop. A lot of times after the first halt, there's a jump. And the reason why it halts is because they literally need to collect all of the shares and sort out the volume because the clearinghouse cannot handle it. All right. And that's why a lot of times you see a jump followed by a little bit of a pullback, a curl around, and a continuation. These patterns are very, very predictable. All right. But here's what happened. It didn't halt to the upside. And I think all these algorithms had caught that. And that's what caused a massive sell-off to occur. And when I watched the tape on this, it wasn't even bloody red. Okay. But as you can see here from the downside, from let's just say 34.19 to where we halted, we moved, 14%? Sure. But it's still, we read the rules, 10% within 5 minutes.
But these candles are bigger. These candles are bigger than these upside candles. I mean, I can tell that just by looking at it. So it probably is a 1% thing then. It probably comes down to that 1% technicality. And if we're being honest, it probably was engineered by the algos to skirt that rule, to make sure that it moved by 0.9% in 30-second intervals so that it wouldn't halt on the upside and that it would halt on the downside. And then the selling ditched that 0.9% and said, fuck it, let's just sell. And you're jumping down by 2% in 30 seconds, and then it gets halted. So, that's why I take the time to look at these very, very, dry details like this, because it really, it makes the difference. And that's the thing about this. He said he's been investing in the stock market for long enough to know this stuff. Okay. So then you should know the goddamn details matter. The details matter. That's why really you have to obsess over the details, because you think you know what it should do. Well, there's a lot. It's not. So yeah, I mean, you can tell that just by looking at these candles. You can tell it by looking at these candles. So yeah, and even it's this is 1 minute candles, so you got to go smaller than that and look at those increments. Would be my, that's my That's my final answer. And yes, it's my final answer. All right.
Didn't halt to the upside. So it's really like, why didn't it halt to the upside, but it halted to the downside? And like I said, once the algorithms just took over, it was a complete blatant manipulation.
Now,
here's where
took
things
over.
Get a little bit dicey. So like I said to you,
everything
should
is
have
algo.
halted to the upside based on, one, my experience, and two, what we specifically just read right here, 10% or more within 5 minutes.
So you looked at a Wall Street Mojo Google blurb. Okay.
Then I was also over on Reddit. Okay. I saw this on Twitter and it took me over to Reddit. But these individuals were getting in the money notifications prior to the halt. Okay. Now, if it happened when the halt occurred, a lot of times you will see the bid and ask on these just wide open. All right. A lot of times if it's halted to the upside, you might see the bid at, $50, $60, $70. All right. It's because you're in the middle of a halt. It's very normal. But for them to say that this occurred before the halt.
Okay, but I mean, do I really need to point out the fact that this says GameStop and you're looking at an AMC chart? Like, and it was only, the evidence that was shown for this only said GameStop. There's been nothing shown, and this is even on Super Stonk, so... All right. Red flag number 7.
Leads me to believe that there was supposed to be an upside halt. And when there wasn't, that triggered the algorithms to just immediately sell, because it didn't get a halt. All right. And like I said, if you've watched these halts before, if you've been in the market long enough, you'll know that after the first one specifically, a lot of times you get a big jump out of it, especially when there's volume behind it. All right, if there's a low float stock, all right, pumping on very low volume.
But this isn't a low float stock.
2.5 million shares in the first minute, all right, and 14.5
different
million
situation.
shares in the first 5 minutes is not low volume. I'm talking about when you see an upside halt to 30, 40, 50,000 shares. Yeah, it's just probably just a couple people in there. It's not a massive group of people and funds. So you will see a pullback, but when you see volume like this, it's a massive explosion after the first time hold. And that is blatant manipulation. Now, does that lie specifically on the market maker, on the clearinghouse? Unfortunately, I don't know that answer. All right, but I do know this was blatant manipulation. It still held up very strong throughout the entire day.
Okay, blatant manipulation.
We still are above that $28 level. If you do zoom out to the daily chart, you can see that same level of resistance that I had. All right, and we are still above yesterday's close, which is a good sign. All right, there is a little bit of an indecisive candle, and it was red, obviously, because we gapped up going into the market close. We did have good volume today, 211 million shares. It'll be nice to see a continuation going into this. However, keep this in mind. Talk to whoever you need to talk to. I would really love to get more information on specifically why there was no upside, which eventually led to a downside because the algorithms took over. And even like I said, when I watched the tape, it wasn't bloody red. So guys, that is it for this video. The fight is not over. I'll see you in the next one.
Okay. So, yeah, maybe I'll look at that. Not now, because I don't want to spend too much more time on this one point, but point just being that, it's a little bit more, it's a little bit more than just the 10% thing. Okay. All right. So I said I was curious because I didn't know where he was going with that, or where he was going to go, or where just like the stock market, you never know. But I'm glad that I looked at that. I'm gonna look at a couple more videos and see what we got here. There might be new stuff actually. Okay. Stop losses are a lifesaver, Manuel Fernandez mentions. And yeah, many of the people could have made money on AMC, but they bought into the hold model, which the hold model is That is the play. I heard somebody say this. It was that Teddy Zane guy the other day. He said, when we looked at it, the apes are the play. The apes are being played. I think he said it both ways, but, you know, and we've been saying that for months now. Months. So, yeah, that is exactly it. It's the same thing. It's kind of like in a way, the Facebook, the Google model of you being the product. You know, your information is the product. Not unlike payment for order flow, where your trades are the thing that you know, are basically sold. So no, nothing new, really. I'm sitting here clicking refresh, like there's got to be something else. All right, get Lou all bundled up because it got cold out here.
What's going on? What's the little motherfuckers? All right, listen. I wanted to comment on something now because I'm actually going back in time now. Remember when I was saying it's bullshit, we don't own the float? Well, now that time has passed, I want to put something out there. Do you really still believe that retail owns the float? If motherfuckers can just buy in, sell off, and do whatever the fuck they want, that's like being married to somebody.
Yes, because naked shorts. Come on, Lou. Naked shorts, man. Naked shorts, yeah.
That still dates. That person's not married to you. They're single. So I need people to understand going forward. One of the reasons why this play goes through a lot of the stages that I talk about, as far as like, you know, what are the numbers? Because we're bigger, because they kept selling, because you can continue to buy in. It's because that one little factor that nobody points out. How could we own the float if you could still buy in?
Not nobody.
No matter what happens, motherfuckers can buy in. Jesus can come tomorrow and take a fucking position. That's the kind of thing we're talking about. So I just wanted to put that out there because people forget about that. People are like, Lou, you're wrong. We own the float. You can't own something and lock it down when the fucking thing continues to expand. Now do you understand what I'm saying?
Oh, naked shorts?
I mean, like,
naked
no
shorts?
joy. Like, this is the reality. AMC is like Kool-Aid. You continue adding water. As long as the motherfucker stays purple, it's Kool-Aid. You're never going to get away from that. Just keep stirring that motherfucker.
Interesting
That's
analogy.
the AMC float. All of a sudden, you went from a pitcher of Kool-Aid to a swimming pool. That is where we're at. So, for all the people saying, no, Lou, 100%, we own everything. Tell that to the motherfuckers that keep finding shares out there. Love you, motherfucker. Let me tell you something. I'm not being anti-AMC retail. I just want to keep you motherfuckers like sharp in the head. This is a fluid play that still has buy-in potential. It's impossible for us to own the float.
To kill Michael Myers.
The float is continuing to expand. So,
okay, so
motherfuckers.
naked shorts. Naked shorts. The float has become irrelevant because of the ability to create synthetics at will. How about this play has become irrelevant because of the ability to create synthetic facts at will. That's what this is. These are synthetic facts, plain and simple. My favorite one though still is, and this is something I just just heard about this the other day. Synthetic price failure. Synthetic price failure. That's what's happening here. They're hiding it in the futures market. Okay, probably the wheat futures, or European oil or something that's very volatile right now. There's a lot of liquidity there. They can slide it in, slide it out. Synthetic price failures makes total sense. Here comes the FUD again, raining down our heads like a tragedy. Aren't you the victim? Yeah, so synthetic facts going on all over the place. Man. It's just, we own way more than the float, 10 times over. There it is, 10 times. 10 times over. That's the good old KC Shaw's catchphrase, synthetic price failures. Synthetic price failures. Oh, God. Oh, it's so great. Synthetic price failures. Oh, my God. Synthetic facts. Synthetic fucking stock analysts. Synthetic YouTubers. Everything's fucking synthetic. I would say simulated. Simulated fucking stock analysts. Contradicting. Everybody's saying contradicting. We own the legal float, but when there are 10 billion shares out there in our accounts and out in the universe, what does log the float say these days? I haven't been on there lately. The form is closed. Outstanding shares, right? Current institutions. Retail shares logged and approved, 17.8 million. Oh, man. That's not anywhere close to proving that there's billions of shares. Total number of shares locked, 233 million. Remaining, 280 million. That's a lot of shares that could still be owned by retail investors without the need for counterfeit ghost shares. 280 million. Yeah. So no, they have nothing on here. The site has not been updated. This looks exactly the same. There hasn't even been a blog post since January. Wow. This is a fucking synthetic DD failure right there. Synthetic DD failure. Good job, you abuser of intellect. Can't even abuse the synthetic facts anymore. Wow, that's pretty sad. That was supposed to see, and that's how you manipulate right there. You come out with this, for lack of a better term, press release when you come up with this idea. Log the float. It's going to prove that there's billions of synthetics. And everybody go here and log your shares and provide us a screenshot as proof that you own them, okay? That's a pretty lax requirement. But even so, only 17.8 million were logged, even with probably the ability to cheat. So, but it was the proof, quote unquote, the proof was front loaded. The proof was accepted when the fucking thing was announced, not when a very pathetic amount were actually counted. And there's not even any type of like extrapolation or anything on there. It doesn't prove anything. Yet it's already been accepted that that's the case because you marketed it the right way, you promoted it the right way, you manipulated people the right way. Like, that is the shit to me. That is the stuff. Like, log the float and all of the hype around that. That's the kind of stuff the SEC might look at. They might. Who knows? I looked at SEC cases, filings, not the regulatory stuff, enforcement stuff, and they look at a lot of stock pumping. They look at a lot of pump and dump boiler rooms and things like that. They actually do. Now, they're behind. So by the time the press release comes out, by the time the actions are taken, yeah, it's a couple years later. So who's to say that the abuser of intellect won't be investigated or isn't being investigated. Hell, I could be being investigated, but I mean, shit. I generally go with stuff that I can prove with evidence or show with evidence, and highlight that. So I'm not really that worried about it. But you know, you've created a narrative. What's going on, guys? Welcome back to another video.
What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC
We've got an Ortex update coming. I know we do.
This evening. So what we're going to be covering in this update is, yeah, obviously, we're going to be talking about this nonsense that we saw in the morning today. There's a very specific reason as to why I think this occurred.
Listen
we were
to that
going
confidence.
over it a little bit today. But it just kind of goes to show the lengths that these large market-making institutions are willing to go to in order to try and recoup their losses from the options that they have to sell. Now, in addition to this, we're going to be going over why the shorts just have such a wild issue right now with AMC. They're kind of locked in these positions right now. And even after what we saw today, they couldn't even push the price down after a 44% green day yesterday. Now, in addition to this, we're going to be going over a little bit of the Ortex data, the short interest.
You don't think it's going to go down by Friday? How many weeks have you been looking at this, kid? How many weeks have you seen this happen? Oh my God. This is aimed at the newer, less informed apes. Like, it has to be. Because anybody who's lost money on options on AMC, you sit there and say, oh, yeah, 44% up. I mean, yeah, past performance is not an indicator of future returns. It's not. So, but that cuts both ways. You're already seeing it today. You already saw it today with that beautiful doji candlestick. Okay. I'll just shut up.
The difference between the borrowed shares today, the return shares today on both AMC and GME, and we're going to be taking a look at the options
Ortex
chain as well. So before we get into all of that information, if you enjoy the information, it really helps us like this video. And again, guys, you've seen this 13 and 48 EMA crosses. If you do want to learn more about that, make sure you check out the link to the Discord down below. We are alerting you guys for free.
Make sure you look at my video on this handy dandy histogram here instead of all these sloppy lines.
On the 4-hour
yuck
cross, we currently have about 120 stocks in there, but we are building that up to 500. If you do want that personalized one-on-one trading in the 20 private live, make sure you check out the premium as well. So AMC today closed the day at $29.44, up about 0.38%.
Here we go with the play-by-play.
The first thing that I want to kind of cover is why these shorts kind of have such a big problem right now. And we kind of have to look at this chart on a couple of different time frames here. So yesterday, we got this daily 1348 cross right here, a closing candle above the 200 EMA, and we started to come back down to maybe come and test this exponential moving average today. We didn't necessarily quite get there, and we bounced right off the low of the day in that $26
which one is that now?
EMA, and we started to this chart on a couple of different time frames here. So yesterday, we got this daily 1348 cross right here, a closing candle above the 200 EMA, and we started to come back down to maybe come and test this.
Okay, 200 EMA. All right. I mean, whatever, I guess it's 6 or half a dozen, but I have always kind of known and been taught that, you know, to use a simple moving average for that long-term one. You know, if you use the SMA, it's a little bit less. Well, we'll see here. We'll see. We shall see. So we're going to change it to 200. Time you do anything, it changes everything. So let me get my shitty lines off here. Okay. Now, if you use a regular simple moving average, which again I always done for the long-term one, yeah, you didn't close above it yesterday. So it's probably why he's using the EMA, I would imagine, because he can say that it closed above it. See, because it weights more recent. Yeah, it's using an exponential formula, but that's quite a difference there. Make sure I'm right. 200, and I don't have the smoothing line on. Yeah, manipulative little shit, little shart.
This exponential moving average today, we didn't necessarily quite get there, and we bounced right off the...
And he's even saying that you almost tested it today. I mean, listen to that shit. Like, yeah, you did, and it fucking got rejected from the actual relevant moving average. Oh my God. Wow. All right, let me see. Why don't we use the quadratic moving average? You know, it'll show something super bullish, I bet. And I don't know if that exists, but I'm gonna make it. Yeah, so the EMA is down here. Why does it put it in the same color? You know that there's another indicator using the same goddamn color. So difference between EMA and SMA. Okay.
The low of the day in that...
They all think they're Bruce Wayne. They feel important, like crime-fighting superheroes. Yeah. I don't know when SEC meme tubers raid, but you can bet that I'll be streaming it. I'll be covering it, and they won't be.
that $26 range and came right back up. When you think about price movements of stocks, if a stock goes up 44%...
Here we go with the theoretical... The thing about price movement with stocks is... Here we go.
When you
listen, guys, here's some wisdom.
Think about price movements of stocks. If a stock goes up 44% in one given day, the next day, more than likely, it's going to come down. We did not see that with AMC.
I mean,
that shows a sign of immense strength in this stock. And it kind of confirms everything that we've been kind of saying with these technical indicators. The
kind of confirms everything we've kind of been saying. Yeah, you're kind of an idiot. Kind of an idiot. Crime. Meme investors wanted to take hedge funds' money, but ended up giving all their gains, significant capital back to the market. They did. But I need AMC to go up. Can you make AMC go up? What can I do to make AMC go up?
Closing above the 200 EMA over here. The daily cross, the closing above the 200 EMA over here. Everything is looking very, very solid. Now, I also kind of wanted to get into what exactly happened today. In the morning when we saw this massive price run up here, and then
based on what we've said already about his little moving average grift there, again, I'm super curious what he's going to say here. I mean, I wonder if he and Jeff got together and like coordinated what they were going to say, or maybe they'll come to the same conclusion, or maybe it'll be different or something. I don't know. I'm on the edge of my seat.
In the morning when we saw this massive price run up here, and then a giant sell-off and a halt to the downside, which is typically not the best thing that you want to see. In my mind...
No, it's not. It really isn't. But I'll tell you what. It's interesting that he's using 5-minute candles here. He's using 5-minute candles here. I would say, this is speculation, so that they look huge, basically. You got two low hangers there, as opposed to the, still pretty large, but, not as crazy looking ones here. But, you put that in 5 minutes, it's like, holy shit, whoa, it went way up and then way down. Wait, where is it? Shit. God damn. Trading view. Anyway, yeah, you see. And Bad Back is saying again, he's echoing like what what we were all talking about on Jeff Forbes' video with that weird whataboutism of, well, they halted it to the downside. Why didn't they halt it to the upside? Well, motherfucker, what? And it's like, here's what it is. They'll find a way to spin anything, even if it actually might be beneficial to long stockholders. They'll find a way to spin it so that it is the hedgies manipulating. They'll spin it, not only to be that, but also for a reason to continue to believe in the narrative, no matter what it is. Everything, anything, everything. Well, let's hear Short the VIX do it.
Find right here, it all has to do with the options chain. When we come over to the options chain right here,
boy,
you can kind of see that the open interest is blank on a lot of these strikes for these weekly expiration dates, but you can see the volume on them is very, very high. So these are new options that are getting added into the market that the market makers are collecting premium on. So Citadel, Virtue, or any other large market making
critical thinking skills there.
When yesterday the stock went up 44%, they were losing boatloads of money on the calls that they sold, unless they were properly delta hedging by going out in the open market and buying the shares that they needed to. Which were they? They potentially were. Maybe they...
Okay, I have to go back here because listen to what he's saying. Put it in context. He's talking about a 44% upside day, okay? You had high volume. He's talking about all these call options that went in the money, and then he's talking about hedging. Okay, just think about it, if what he's saying makes sense at all.
Yesterday, the stock went up 44%. They were losing boatloads of money on the calls that they sold, unless they were properly delta hedging by going out in the open market and buying the shares that they needed to. Which were they? They potentially were. Maybe they were not. Now, when you...
Maybe they were, maybe they were not. Now, I don't need to point out the fact that Short the VIX is, a lot of his whole narrative is based on the delta hedging theory. And he said in very certain terms before, many times, that they have to go out and buy this number of shares. They have to go buy such and such millions of shares. He has. You've heard him do it. You've heard me talk about it. So now he's saying, well, maybe they did, maybe they didn't. I don't know. I'm not sure. I don't know. When in reality, if we put 2 and 2 together here and not get 5, what he's probably saying, what he probably should be saying, he should be connecting the fact that you had this massive buy volume coupled with an explosive option chain. Isn't it kind of prudent to connect those things and maybe think, okay, X because of Y? We just had random on a Monday, 200 million shares volume randomly, when last week it was, way lower. And it was a little higher, maybe, not 2 days. God, it just moves it every time. So 31 million, 34 million. So low relative. I mean, and in the 10-day average is even 96 million, and it was 212 today and 228 yesterday, 226. So one day last week it was 170, and then you had it still under 100 million. And that day that it was the day that it was last Wednesday. Okay. But he's talking about this option chain. He's talking about hedging. So, I'm just gonna. This is a wild, crazy, speculative notion, but maybe a lot of that buy volume was that delta hedging that you're not sure now randomly. You're not sure that they did it. Maybe it was. Maybe it was. I mean, that would make a lot of sense because, yeah, there were quite a few options that went in the money. But, this just illustrates the lack of... He had the critical thinking skills to deduce that these were added strikes because there was no open interest, so that's good. But beyond that, what the fuck? What? Okay. I want to hear
Unless they were properly delta hedging by going out in the open market and buying the shares that they needed to. Which were they? They potentially were. Maybe they were not. Now,
maybe not.
When you think about what they did this morning when they added these strikes, we were talking about this in the live stream this morning that a lot of people were asking, well, what's going on with these strikes? In the back of my mind, I was like, They are most likely going to try to run the price up, entice people to buy all of those new options or even the existing options on the chain. Like again, here we see a lot of volume on a lot of these options, 11,000 at the 30.50, 9,000 at the 29.50.
Oh boy, 9,000.
Once they entice people on kind of a bait and switch run here, they drop it really hard, buy those contracts back, and try to collect that premium back. That is absolute blatant manipulation of the stock.
Oh, wow.
Now, again,
absolute blatant manipulation. Except it's not. Except, why did you buy the fucking contracts? Why did you buy calls? Why did you buy... I mean, I didn't look at the puts, but I did look at the calls, and they were expensive as fuck going into today. Like, even the highest strikes were. So I'm like, no thanks. No thanks. And then after that, the day went sideways. It was a sideways drip, volatility killer, although it's still high. But the reason that these things work is because I'll borrow a term, they know how stupid these investors are. They know how uninformed these investors are because they listen to people like this who totally lead them down a random wrong path. I don't, I mean, correct me if I'm wrong, but, why would these retail investors, by and large, are in this stock are uninformed? We know that. We know that. We see it in every venue, in every forum, every day, all day. We see it. We know, and we see the option chain. We see it, even when the stock's going down. All these calls, whatever else, but. Maybe it's just new people. Maybe it's a bunch of new people again that this play depends on new blood. But I mean, okay, that just like we know that the apes are uninformed, we know that Wall Street are corrupt. That's not up for debate, really. We know. I'm not saying illegal. I'm saying shady, slimy, manipulative, but not illegal necessarily. I want to make that clear. Because, think about a lot of stocks. I mean, the expectation is one thing, but the market's already dealt with it internally, but the media comes out with an article oh, this happened in this company, and it's super bullish for the stock, and then the stock goes down. That's not really illegal or manipulative. It's just kind of the way that the market functions. And this is probably similar. So I'm going to catch up on the comments here, chats. Bad back, like telling him his whole community to buy a certain stock and not to sell. Also, many other grifters doing the same. That's blatant manipulation. Model 3. I'm not an options guy and feel sorry for these guys. Listen to them lose money every week. Yeah, and I'll echo that too. That's why, partially why, I'm spending my time doing this. You have to get over my frustration a little bit, but again, at the end of the day, I mean, I wouldn't spend the time. This is actually very interesting to me to like dig into, not the AMC itself, not the actual stock at this point, but this manipulation and what they're, it's like, I don't know, it's fun. It's like it's like learning about a cult or something. It is. It's like learning about. It's like I didn't get into, but I got into like learning about Scientology one summer because it was so fucked up. It's a morbid curiosity, like, or whatever stuff like that. And at the end of the day, it's psychology. Really, it's psychology and behavior. Behavioral finance is so interesting.
Just because they did this today doesn't necessarily mean we are losing it all. Remember, we are up a crazy amount over the last week, and we ended up finishing the day in the green, which is another really, really awesome thing to see. Now, coming over to the ortex data right here, let me just refresh this so we can get that most up-to-date data that we have on ortex. So they're still showing 100% utilization. I personally still think that's kind of nonsense because we are not at all-time high shares on loan yet. As you guys can see back here, let's see if we can kind of move this out. We can see on loan, actually free float on loan. So we can see on loan way back here, we had 152 million shares on loan. Right now, we're showing about 139 million. So we still have a little bit of a ways to go. But look at this right here. Max cost to borrow stepping up significantly on AMC today to 14.39%. Very, very solid.
If one thing has been demonstrated, right? It's that I'll borrow the term again, they have some deep motherfucking pockets. Like, this has been going on, really, short selling goes on all the time. So it's not even a thing. Maybe the level is elevated, or in supply and demand terms, yes, the supply is there's an abundance of supply. There's been an abundance of supply for a while, but and maybe more than is typical. But okay, and the cost to borrow max is going up. But what about the overall stock though? Like, what about the stock itself? So you're sitting there hyping the cost to borrow, okay? All right, but I mean, shit. Even just from beginning of the year. Obviously not until now, but before this most recent run up, it was down another 50 something percent. And if you're a short seller, that's good. That's really good. Or, hell, take it from November. Take it from November to the beginning of the year. There's 37% right there. So it's like the narrative is that these guys, the short sellers, are hurting. They have a giant problem. And they're hurting because, it costs them more to borrow the shares now, while totally ignoring the fact that they have been on the right side of the trade. and you see these returned shares versus borrowed shares, which, by the way, are we going to hear that there were more returned shares than borrowed shares on this report, which would be indicative of last Friday with T+2 factored in? You're not going to hear either of those things. That's my guess. You're not going to hear, you're not going to hear three things. You're not going to hear mention of more returned than borrowed. You're not going to hear an explanation of what returned shares represents or means. And you're not going to hear anything about this actually referring to a previous trading day. But, that's all the same on every video.
Solid indications there that the shorts are getting even more pressure put on them. Now, we still have that 20.79% estimated short interest, and we also saw here that they returned about 1.69 million shares today. That is not really a sign of widespread shorts covering. There is still 8% estimated short interest, and we also saw here that they returned about 1.69 million shares today. That is not really a sign of widespread shorts covering.
No, they didn't. No, that is the net change, which you can't really see because, again, for the fucking 1200th time, why is your screen cut off? That is so fucking... Anyway, no, that's not what that means. The return shares was 2.7 million. Okay, the net change, which is just something that Ortex calculates because they don't think that you can subtract, which is probably a good assumption, was 1.69. That's not the number that they returned. These returned. When it's returned, that position is canceled out. That short position goes away. Now, if you start another one, that's a new short position. So I know I'm nitpicking here, but he's still, like, I say he still didn't address, he even though he's talking about it, he didn't really address it because he's wrong here. He's misrepresenting these numbers.
Have that 20.79% estimated short interest, and we also saw here that they returned about 1.69 million shares today. That is not really a sign of widespread shorts covering. There is still a boatload of shares out there, and Ortex is really only going to be going off some of this reported data. This is not even accounting for any of those quotes like synthetic shares, naked shorts that are out there in the open market at the current time. Now,
that are out there. Oh, okay. Right. So you spend all this time talking about Ortex, which is only based on the reported data. I mean, those synthetic price failures that are out there in the open market, where, by the way, even assuming that he trades on Webull, which I'm pretty sure he does, you're not even on the open market. You're on fucking dark pool here. Like, just contradiction after contradiction after contradiction, which is what you're going to get with these motherfuckers with a join button. $4.99 a month. That's what it's about. That's what it's about. It's always been what it's about for these guys. Jesus Christ.
Briefly touch upon what's kind of going on with GME too, because their data's been looking pretty good. They've been going on some massive runs as well. And we can see here that they returned about 476,000 shares on them today. The max cost to borrow still very, very high, 36.6% max cost to borrow. Estimated short interest here, still 24.33%. Very, very,
still very high.
High. Days to cover still high, 5.54 days.
You have to be very, very, very high to like actually listen to these people and take this guy seriously. Oh, Shiny says was once roped into a museum tour on Hollywood. It was a Ron Hubbard museum. What? So it was operated then by Scientology, I'm going to assume. I don't know who else would actually operate a museum to Ron Hubbard. That must have been interesting. Yeah. So what Scientology says about Ron Hubbard versus like, and again, it's very much like this. What Ron Hubbard and Scientology said about Ron Hubbard versus what other people say about Ron Hubbard and what the facts are, there is a wide disparity there. Just, objectively. So, very similar to this here. We can only go off of the data we have that we can back up with evidence-based information. And this stuff is just, it's Ron Hubbard claiming that he was a commander of a naval ship and, led, had a, victory at sea or whatever.
Is kind of looking in our direction at this point.
When in reality, he was basically kicked out.
These two big short squeeze stocks, the data is looking really solid. When you combine that with the technicals, when you combine that with the good fundamental news coming out about these companies, it does not make sense.
Good fundamental news. Listen to that. I mean, it's just literally one statement after the next, after the next, after the next.
All
Jesus.
In any fashion to be short these two stocks right now, which is why I believe that we are on the winning side of this trade, and is why I'm going to keep holding and buying more when I can. So then the kind of last thing that I want to touch upon with you guys today is do a little bit of analysis of what we're seeing here in terms of a gamma squeeze and the potential for a gamma squeeze by looking at the options chain right here. So when we come over to Stonko Tracker,
yes, because that's where we love to use options from.
Call contracts in the money at the current time. So we are still in the beginning of the week. There is 125,000 contracts out of the money. And when you think about it right here, since they added a boatload more of those contracts, market makers are playing with fire here. If people start buying those contracts and the at the money, in the money contracts, the market makers are going to have to buy. And then we start to see the price run up, sending more contracts in the money.
Wait.
Well, they're playing with fire here. If people start buying
okay. Listen to what he says.
More of those contracts. The market makers are playing with fire here. If people start buying those contracts and the at the money, in the money contracts, the market makers are going to have to buy, and then we start to see the price run up, sending more contracts in the money.
So he just disproved himself from earlier. He said what I said he normally says that he didn't say this time. He said, oh, maybe they did. Maybe they didn't. I don't know. I don't know. Everybody just bought the stock. I don't know. But there's all these contracts, and now he's saying, now you get it. Now you fucking get it.
Market makers are playing with fire.
Jesus,
if people start buying those contracts and the at the money, in the money contracts, the market makers are going to have to buy, and then we start to see the price run up, sending.
Like yesterday, maybe? Like yesterday? Huh? Like that? Like this? Like all that? Like this? Like this? Oh my God. That's a first. Honestly, that might be a first. That might be a first. He debunked himself in his own video. He debunked himself in the same video. Fuck.
More contracts in the money? Well, we're going to see potentially 150,000, 200,000, 250,000 contracts in the money by the end of this week.
Let me throw some large numbers at you.
Gamma squeeze territory right there.
Hard yet?
For the amount of shares that these market makers are going to have to buy to hedge these contracts.
Boom.
Now, in addition to this, when you kind of combine the amount of puts that are in the money right here, there's 1,951. That is a tiny, tiny, tiny amount of puts. And again, guys, for those of you guys who
tiny amount. Yeah, like I'm not even going to say it.
Gamma squeezes kind of can work in both directions. If the stock starts to go down, in order to hedge those puts that the market makers are selling, they actually go out in the open market in short shares in order to make.
No, they don't. No, they don't. Okay? That's ridiculous. That's ridiculous. I'm going to calm down and read the chat. Why do they think market makers are afraid of them or apes? I don't know. They think the market maker is a biased party. They think that the market maker is on a side of the trade. But they're not. It's not how it works. The problem is, and this is where Ken Griffin fucked up. Why do you use Citadel for everything? Use a different name. And they actually started to do that with the hedge fund, I believe. Or they have different hedge funds or whatever. But because you have Citadel, because Citadel Securities is a market maker, supposedly, you know, they operate, you know, the market for retail brokerages, because there's also a entity called Citadel LLC, which is the hedge fund. The original Citadel, that's what Ken Griffin did first, was the hedge fund in the 90s. But because they have the same name, these simple-minded people can't make a distinction. They can't make a distinction. And there are other entities and institutions in the world that have the same name as something, like, or, you know, company A has different markets that they operate in. They do different things, but they have the same name, for example. Or there's also like a military school called Citadel. So there's same name doesn't necessarily mean anything other than, you know, yeah, this is Ken Griffin's empire, you know, and they have their hands in all these different things. They're all called Citadel, but that doesn't mean that Citadel hedge fund necessarily has anything to do with the market maker. Maybe they do. Maybe it's all one big conspiracy against retail. That's what these people want to believe. Then that's an easy way out. That's an easy way out. Just there's an evil man who's controlling everything, and yeah, he has a hedge fund, and he also has a market maker, and clearly, you know, he's using the market maker to offset the losses of the hedge fund. That's the real implication, as far as I can tell. The market maker is playing around with stuff to help the hedge fund, right? That's the insinuation. That's the implication. That's the easy way out, I say. When, I mean, at the end of the day, the market's, it's kind of fucked up anyway, because you have this payment for order flow system that we, you know, I think it's a valid concern to say, you know, we don't know. Maybe it is. Maybe it's not to any detriment of retail investors. Maybe it actually is better, right? And there are a lot of ways that you could say, just right off the bat, that it is. The first of which being, you know, no commissions. No commission. If you had to pay a couple bucks for each of those option trades, if you had to pay a percentage when you sold your position to take profits, and you had to give a cut of that to the, you know, your broker, it wouldn't have happened this way. So that's kind of what allowed this whole thing to happen, which we've also talked about a lot. But maybe there's a downside to that. Maybe there are, because the market is sort of in this black box. I mean, it always was, though. It always was. But unless you're literally on the floor at a live auction where you're interacting personally with the market maker or auctioneer, then it's transparent. But so, you know, hasn't been that way for a while. Really wasn't that way for retail anyway. You call your broker does it for you, so you have to trust. And so there's a chain of trust. So maybe it's just shifted to different entities and yada yada yada. Okay. But at the end of the day, people can make money. It's not like everybody loses money. It's not like every stock is a scam. It's not like retail can never make money. It's 100%. You are, when you sign up, when you give your money, you are parting it with it forever. No, that's not the way it is. And can you blame the market maker for doing, you know, and I don't even want to say doing this stuff, but like, if you knew that you could get more money by selling another product, let me just put it that way, in the most basic terms, because this is true for any business, any market. If Colgate knew, if Procter and Gamble knew that they could make more money by selling another brand of toothpaste, I don't even know if P&G makes toothpaste. That's why Colgate or whoever, Unilever, whatever. If they thought that they could make more money selling another variation of the product, would they do that? And that's what we've seen a lot of throughout, my lifetime. Certainly, it is like this illusion of choice in a lot of different areas of like consumer society. So yeah, they came out with another product. They came out with a few more products here to fit, in between, if you will, other products, to fill a need in between other products that they already offered. If you could do that, why the fuck wouldn't you? I mean, honestly, I would go 29.75, 30.25, 30.75, 31.25. I would put in quarters. If I knew I could do this, and I could make money and there was no risk, there's always risk. But, that's why they offset that, and there's ways to offset it. And delta hedging is one way. It's one way. But don't forget that the person selling the options sets the prices. They can, if you're selling something, yeah, it uses this pricing model, this calculus equation. This is how we determine our prices. But if you look at a theoretical option price calculator, it doesn't really come up the same exactly. So, point being, the seller can set the price to a certain extent, and to a certain extent not. And generally speaking, it's pretty efficient and it works pretty well. But the volatility component is another story. It's, hard to wrap your head around. It is for me. But I think of that as that's the risk premium. And that would also include the theta, the time element. Because the longer time between now and the expiration, as that time gets shorter, less and less time, you are not risking as much, kind of, is how I think about it. Anyway, not an option discussion, but point being, so what? They added more strikes. They did the same thing in May. They did the same thing in June. They added all the way up to 145, and just like this, probably the which I'm going to look at right now. The apes bought it. They bought into them massively, to the tune of like probably billions of dollars. I don't even know. That's why I say I wish we could figure out how much money was spent, transferred, that transfer of wealth that we started off talking about, that largest transfer of wealth. Okay. So I'm just curious, actually. I don't know when he recorded this. I don't know. 76,000 on the 30, just to compare the numbers. So 78,000 volume. It's already showing. Okay, but that was 30. Okay. Yeah, it was the 0.5s that were added. But I mean, so these prices are way inflated. I can tell you that because the implied volatility is over 300 here at the money. So the theoretical price, it says, is 393. Let's say take volatility down take volatility down 100%, and you get a new theoretical price of 261, and really take it down 200%, and so you're down to 129. So 2.5 times volatility premium of 100% implied volatility, which, if we look at this, it's saying that it's 195 on the stock. So IV percentile 34. So 34% of the time in the last 1 year period, implied volatility was under 195. That's what that's telling us. So 34% of the time it was lower. That means it's high. That means it's higher than it was most of the time previously in this past year. So, all right. Anyway, getting back to this. If I could do this, I would. Definitely. 19. I mean, these numbers aren't even that much. Like single digit thousands, except for, they're all, it's every other one. Okay, 30.5. I wouldn't buy these at all. I probably wouldn't sell them either. I just avoid this personally. I probably wouldn't touch the puts either at this point on this week. Although they are, the implied volatility is lower, so the price, it's not as bad. So like you could get, I don't know, 25.50, but you also have low volume, low open interest here, so your spreads are a little bit more loosey-goosey, although these are too. Anyway, it's a weekly expiration. It's not that important anyway in the grand scheme of things, and you're going to have lower volume, although that is a kind of a big spread. Anyway, I would look at the April monthly probably for more validity, I guess. And so it goes up to 60. It only goes up to 60. I wonder why they haven't taken that higher. Because when it was like 40, 50 is when somewhere in there was when you got it to 145, which is 3 times the price. So you're at 20, 30. I mean, yeah, you need to be above 60. Be cashing in on that. That's an error by the market maker. An error of not cash grabbing. So, yeah, anyway. Tangent. But nothing new there at all about products being added, additional products offered for sale. Nothing about a product being offered indicates that you have to or should even consider purchasing it. So that's basic common sense again. Whoever said common sense earlier is basic common sense. Okay. I'm going to look at one more video. I always say that, but man, there's really not that much coming out tonight. Is it just me? There's 2 hours ago? Really? And why are we not excuse me, why are we not on the list here? I know why. Okay. No, there is one that I wanted to see. And I didn't see it on this search result, but I saw it on my other computer when I was looking for something else. And it was the short squeeze channel, which, man, this one is This one is really, God. So, as we can see, desperate Ken Griffin halts both AMC and GME at market open to stop the mother of all short squeezes. Wow. I wonder what data he's got on that. Well, I can't wait.
They've done it again.
So fun.
Citadel, the market maker, they made a halt this morning at market open.
They made a halt.
All over Twitter. Let's take a quick look at this before we look at what happened this morning.
Jesus fucking Christ.
Effectively.
This guy sucks. I'm sorry to say, but he is not. This is not good. This is not good. And this is also not good. This is not good at all. I mean, it's been 7 hours, so, and that's way more views than I'm going to get on any of my videos probably, which is a crime against common sense. But 10,000 people viewed this video and are, influenced by it. That's not good. It's not good. I mean, maybe 0.1% of people were skeptics, people that, like us, like people in the chat here, people in Telegram finance chat, trying to figure out what the hell these people are talking about. So I'll give you that. But yeah, I mean, 10,000 people are willing to watch. They wanted this content, I guess. Yes, you have to look at it that way. They wanted this. But that's pretty poor ratio. So, less than one. Anyway.
Thwarting the squeeze again. Now let's take a look at some of these latest tweets. There it is. SEC, your evidence of fraud. How can AMC and GME halt precisely at the same time? These are two entirely different companies. I mean, I personally lost over 15 grand on that AMC.
I mean, most stocks move the same way. That's the reality. Like, that's nothing new. Nothing new at all. Unless you're a total newbie. Unless you're so inexperienced that you haven't noticed that before. Maybe because this is the first time you've looked at a stock, which there's nothing wrong with that. But you gotta lose the ego. You have to realize in anything that there are people that know a lot more than you. And also that it's fucking annoying as fuck when somebody comes in. I had dealt with this at work recently. New guy, thought he knew everything. Was full of himself. This is basically this. Basically this same exact thing, except he did not make it up the slope. He slid down. He slid off. And he's gone. But, beyond that, it's just annoying. It's really annoying. It's hard. It's really annoying. So, you gotta lose the ego. And, like, once you think you know, that's precisely when you don't know.
That's all I gotta say. Halt. Thanks, GG.
Oh, let's blame Gary Gensler for you losing $15,000. Listen to that. Personally lost over $15,000 on that AMC trading halt. Gary Gensler, thanks for protecting retail. How would you lose $15,000 in the trading halt? How is that even possible? Why? Those are the same. That's the same level of skill that would sell GameStop or AMC when they've restricted buying. Oh, you can't buy. You can only sell. Oh, well, I better go sell it then. What? Why would you do that? How did you lose $15,000? No, you didn't. What you mean is, and I think I know, what they're trying to say, I think, is they had a call position or a long position of some kind that when the stock shot up to 34, but that doesn't even make sense because you still could have sold. The halt was on the fucking downside. So were you shorting the stock then? What does that even mean? I lost $15,000 on that AMC. Oh my God. No, you didn't. No, you didn't. Tattooed mermape. Tattooed mermape.
Entirely different companies.
How is it possible? How is that even possible?
Who does the flying banners, posting this, as you can see here.
Oh, she's a shill.
Insanely high asks right at market open, 600,000, 448,000 when it was halted, and as you can see, just tanked right down.
600,000. Are you talking about? All right. Well, fuck. God damn it! Fucking 4K for this shit. Fucking full screen for this shit. Okay. Yeah, I mean, you get spurious data, and that's not that weird, really, because it literally halted. So that's not a valid. That was never a reference price. Let me put it that way. We talked about reference price when it comes to these limits. The way that they, it's not a price from an eligible reported transaction. Let me put it that way. That's better. That is not a real price. That is not a price at which the stock was ever traded. It's not. And you can go back and look at the tape and you can see that. But that's not a price that the stock was traded at. It's not.
48,000 when it was halted, and as you can see, just tanked right down.
Yeah, because you can even tell, no, it's not at that price, because the price that's shown on the chart is the last price it was traded at. Well, at the current moment. But this is showing you prices that it was traded at. It doesn't go up to 600,000. So it never went up to 600,000. It didn't trade at 600,000.
HYMC, GME all drop and halt at the same time with the same candles. Illegal manipulation, and Webull disables comments.
Good for them.
Etc. etc. That's what everybody's talking about. As you can see, it opens up.
Well, if everybody's talking about it, it must be true.
They
then,
halt
right?
it and they move it down. Now, here's the important thing. Remember, Citadel is the company that between June 12th, 2013 and October 17th, 2017, they were cited. This is just for what they were cited as. It doesn't mean that they stopped doing this. Yes, over 4 years, the firm principally executed between 248 and 7,698 buy orders during a circuit breaker event, failed to establish and maintain supervisory procedures to ensure compliance, and they were fined 15 grand.
Oh boy.
That's literally 1.5 cents to you and I, to the billion-dollar company Citadel. 15 grand for trading during a halt. So what do you think happened today when market?
So, I'm not excusing anything, but I'm just trying to make sense of what's happening. We know that it's not people trading, okay? This is not hard to think about. We know that most of the time that this is computers trading. That's what high-frequency trading is. It's not a person standing there, sitting there, clicking a mouse or hitting a button. It's something that's happening automatically based on a pre-programmed algorithm. Okay? So when a market event happens, like a circuit breaker, like a trading halt, and this not even really, it's not even really worth responding to, because it's a straw man argument. Let me pull up something from almost a decade ago that's not related really at all, because this is not a circuit breaker. It's a limit up, limit down, okay? but whatever. This is just like such common sense, type of argument. That's not really, that is in no way is that any proof or even hint at anything in this, first of all. But secondly, that this is all algorithmic, it's all automatic, it's all computer, it's all electronic, okay? So when this type of things happen, I mean, if you look at this, when the actual halt happened, it was at 9:38 and 7 seconds. So we read earlier that they check the price, the reference price that they look at to determine whether it's too high or too low based on that limit up, limit down. That's checked every 30 seconds. They update it it's updated after 30 seconds, only if the new price is 1% away from the previous price. So that kind of implies to me the fact that this was at 7 seconds. Okay, they check the price every 30 seconds. The reference price is updated. So that would mean that it had to have been updated, well, at 9:38 and 0 seconds, or unless everything is off, like, a plus 3 seconds to everything. So, 9:38:03 is actually 9:38:00, which makes no sense. I'm not going to make that assumption. So this 7 seconds is interesting to me, because what that kind of sort of indicates is that that's the time it took, potentially, from when that price hit the limit. Let's say it hit the limit at 9:38. I could go back to the chart, but I really am getting sick of switching back and forth on here and having it scroll all over, and I'm tired. So sorry about that. You can look though. 9:38:00. So what happened in those 7 seconds? Maybe that was the time that it took. I mean, that's not a lot of time, but it is a lot of time when you're talking about milliseconds and nanoseconds in computers. So it's kind of curious to me, but. So this is when the exchange halted it. So and we know that Citadel has faster shit than the exchange. Most likely. They have faster shit than the SEC for sure. The SEC cannot touch them, which is a whole other issue. And that issue comes back to that's more of a political, social issue, but anyway, like funding and what, all that stuff. It's a capitalism issue. But what happened in those 7 seconds? That's curious to me. So I would say that's probably the time it took for maybe it to be disseminated. Like they had to double check it maybe or something, or there's a process of 5. I don't know. But what I'm just trying to demonstrate here is that this is that's slack, or it's error, or that's a bit extra of time. Okay, so when you say Citadel traded during a circuit breaker, I'm trying to establish the fact that these things don't necessarily happen right at a time. We see on the chart 9:38 is when it was halted, because that's the next minute. But this is from the actual exchange, and it's saying 7 seconds. So that's the word is play. There's play in that number. Because this would be when it was officially halted. I would believe that. This is from the exchange. They're the ones who calculate it and do it. So, yeah, the fact that Citadel, quote unquote, traded during a circuit breaker, we don't know. That doesn't mean that they traded through the whole thing. It doesn't mean it could mean that there were trades literally 1 second after it happened. How do you know? Without looking at it, you don't know. So you're just hyping shit that's unrelated. In other words, straw man, you know, devoid of logic. But that's the thing with all this stuff. There's, you know, the devil, not lose devil, is in the details. It is. And the more you zoom in, the more, you know, the easier actually it becomes just for this shit just to fall apart. It just falls right apart.
Market open and they halted it. You can see here 9:38 a.m. Market opens 8 minutes after the open. The stock
In 7 seconds. He didn't say that. Yeah, right? So the devil's in the details, my friend. That's why this guy, you know, I don't know.
stock shot up to about $34, and what happens? A halt. Look at GME. A few seconds before, 10 seconds before AMC is halted, GameStop is halted. Okay, unbelievable. Let's take a look at the chart here.
Unbelievable.
Right here.
Why?
This is market open.
How is that unbelievable? Nice Haikanashi candles, too.
$34 on the verge of literally going parabolic.
No.
Right? And what happens?
No.
They halt it, and then it tanks down. Literally the next second, it's at $26.
They do it.
From 34 to 26. How does that happen?
Well,
folks, this doesn't get any more blatant and disrespectful.
The word of the day is blatant. The word of the day is blatant. It 100% is. I've heard it in every one of these videos. I read it on the Reddit posts. Yeah, the word of the day, blatant. For sure.
After everything, you know, after years of fines, after being banned from trading in China for their illegal short selling practices. China, yes.
Listen to all, he's just pulling the kitchen sink out here. We're throwing the kitchen sink at it. Wasn't that a hedge fund? Citadel hedge fund? Oh my God, they were banned in China. Oh my, wow, oh shit, years ago. And now, you know what, Mr. Short Squeeze Shill? Shit Squeeze channel. That's what this is, Shit Squeeze channel. You know what, Mr. Shit Squeeze? They operate there now. They operate there at the current time. So, this is just desperate as fuck. Oh my God.
The country where they'll cut your head off for saying one wrong word.
No, oh wow. They'll cut your head off for saying one wrong word. What is this guy like? This guy's talking like a fucking grandma here. He's talking like a grandma.
After the Robinhood debacle.
He's talking like an old fucking lady. No offense to any old ladies out there. But he's talking like I imagine you talk.
The country where they'll cut your head off for saying one wrong word. After the Robinhood debacle, the GameStop debacle, I mean, the million things that they do, they're still doing it in your...
Not you, Lynn. Not you. Of course, you're not old. I'm saying like an old grandma who's worries about, you know, my grandma.
Face with no repercussions. They're coming to your house, slapping your mama, taking your kids' toys, eating your food, and spitting in your face. And
I would do all of that to this shit squeeze. I would do all of those things. He deserves it. This kind of shit is ridiculous. They come to your house. They fuck your wife. I mean, why didn't you say that?
Taking your kids' toys, eating your food, and spitting in your face. And staring at you in the eyes as they're walking out. Taking your car keys.
No, they're they're fucking your wife and making you watch. Basically. Jesus Christ. This is terrible.
It opens, shoots up, just about to touch $200, and what happens the next second? What do we got here? See that red candle, the wick?
Well, it's not the next second because you have 2-hour candles on, genius.
From $200
God.
to $160 in 1 second after the halt. They think they're going to get away with this. This is going to be the French Revolution part deux, okay?
No, it's not. Part duh. You're a fucking idiot. It's going to be the French Revolution. This video should be reported for inciting violence. I'm sorry. It is. Like, no. That's ridiculous. I hate these categories. I mean, it's violent and repulsive for sure, but it's not any of these things. Hateful or abusive content. Promotes hatred or violence. There you go. Boom. I mean, this shit doesn't do anything. It does nothing. It just nothing. But that's ridiculous, because in if we were all adults and everything, and people had some critical reasoning skills, they would just brush this stuff off. But we know that these people are guided by emotions. They are guided by this narrative that is, plays on their emotions. This guy is playing on your emotions, their emotions. So because of that, this is more dangerous than it would be, I believe, if it were anything else, probably. Like, this is ridiculous. Oh, man.
I'm not going to get into details because I'll probably be
Promoting
shadow
death
banned or
upgrades.
whatever, or God knows what Google will do. But you know what I mean. This is not going to fly.
What?
U.S. regulator finds Citadel Securities over trading breach. Okay.
July 20th, 2020. So let's cherry pick, find something that we can do to get the apes all mad. He's doing a good job of getting me mad.
Market maker traded ahead of customers over-the-counter orders over a 2-year period. 2 years?
Oh, over the counter.
This is a while ago. July 20th, 2020. U.S. financial industry regulator has fined Citadel Securities $700,000 for trading ahead of customer orders. $700,000 to them is 7 cents to you and I. Literally, 7 cents.
No, not literally, because earlier you said $15,000 was 1.5 cents. He literally said that. So that's literally. That's what literally means. It means you actually did it. This guy is quickly becoming one of my real, like, he's up there potentially higher than Short the VIX. Short the VIX, Shit Squeeze Channel. These two are, I mean, it's, yeah, this is really terrible. Oh my God.
Okay, I'm going to link this article.
I'm speechless, honestly.
This is just one of the things that they've been fined for. God knows what they're doing. I mean, conflict of interest, this is the poster child for conflict of interest. How are they allowed to be the market maker? Folks, really, if you haven't already, please, please, please transfer your shares.
Video.
If you're buying new shares, go to a non-PFOF broker. There's a link in the description for Public. They are a non-payment for order flow broker. This will at least help.
Oh.
If you're...
yeah, I've heard of them before, that they're non-payment for order flow. And maybe, they probably aren't. But they're giving away $1,000 in free stock. So that's gimmicky. I don't know how in the hell they can afford to do that. Fidelity doesn't give you free stock. They don't. I don't think any of the major brokers do. So my rule of thumb is, if you are signing up for something that's giving you something for free, you're the product. You're there, because nothing is free. Nothing is free. Especially not on fucking Wall Street. So, yeah, maybe they are not payment for order flow. That's good. If you value that, that's great. Still haven't really said why that's such a problem, because, you know, look, there are all kinds of businesses who skirt regulations every day and they never get fined for it. There are a lot of businesses that skirt regulations, they do get fined for it, and they continue to ignore the regulations because it's actually cheaper for them, usually, to just get the fine and continue business as usual. Otherwise, they would have to change a lot of shit internally, and it would cost money. And at the end of the day, that's the point, is to make money. So if you're going to make more money doing this versus doing that, even though this is what you're supposed to do, you can still do that and just pay a little bit of money. Or you can do this and have to pay a lot of money. Honestly, it's probably better to do this, pay a lot of money one time, and then not do that and have to pay money. You see what I'm saying? But that's the nature of business. Again, that's the nature of capitalism. I'm sorry. What this movement has become, and it's not really a movement because it's not advocating for anything. It's just bitching about the current state of late stage capitalism. That's what it really is. The more I think about this, everything, all of these supposed points, manipulation, collusion, fraud, lack of regulatory oversight, these are all features of late stage capitalism. It's a corrupt system. It is. It's fucking corrupt. It's been this way for a long time. Are you going to change it in any way by being a pawn in this game? I mean, no. The better thing to do would be probably to say, you know what? Fuck you, Wall Street. I'm taking all of my money out. This faction of people, this massive block of retail investors, and it wouldn't do anything probably, but it would be symbolic at least. Fuck you. We're not playing your game anymore. You are not going to scam us. You are whatever, blah, blah, blah. And just don't participate in it. And go to the casino instead. The best thing to do would be to actually do something active, or actually taking action to change things somehow. I don't know how that's possible, but and this is not revolutionary advice. I am not a revolutionary. You're 100% correct, Lynn. But and I mean that you said what I was thinking there. But I do think there are valid concerns in some of these things. But the problem is they're cloaked in this hypocritical participation in the same grievances that are being highlighted. And that's that's a recipe to lose. And it's not honorable, and it's not winning, and it has no integrity. It has probably less integrity than the actual thing that you're trying to, react against, because you are on some moral high horse, and at the end of the day, you're no better. So, yeah, this is a lack of understanding of the way that business is in general in this type of system that we have. I feel it's just naive and ignorant. And is it right? No, of course it's not. It's like I see stuff all the time. That's a violation of fire code. That's a violation of OSHA code. That's a violation of electric code. That's a violation of the mechanical ventilation code. Yes, these are all technically true things, and I can point you to the book. I can point you to the regulation. Does it mean that anybody fucking cares? Absolutely not. To varying degrees, no, it doesn't. Maybe it might on the right day. If you talk to the right person, it might. But more often than not, probably not. So you have to like kind of learn those things. Lynn is just spitting the truth here. She's really on fire. Damn right, go to a proper casino with free drinks. Well, see, the thing is, in Ohio, they're not allowed to do that. They're not allowed to give free drinks. So I don't drink anyway, but they're not allowed to do that here because Jesus, basically. But gamblers win, investors profit. I like that too. Gamblers sometimes win. They sometimes win, but it's just this really, like, this whole channel here, like his analysis of the chart is flimsy at best. He's not talking about any, like I try to do. I try to look at the details because I know that the details are where the real, these are the things that most people gloss over, all these, the gobbledygook, for lack of a better term, the stuff that's confusing that I have to read 3 times and highlight, and people get sick of me repeating it over and over, and they leave the stream. But those are the things that matter that people aren't looking at, the finer details, the small points. This channel here is just all the social aspect of it. It's hype, it's class warfare, which, again, maybe I'm not commenting on that at all because that's not the scope of this, but there may be some validity in some of those grievances, but it's just so confused. It's so impotent, is what it is. It's very impotent. This is it's just impotent.
Giving, Citadel business, aren't you providing the bullets for their gun? Okay, you can use the link in the description below. Transfer your shares or whatever new shares you buy. As I said, use the description. You will get a free stock up to $1,000 worth.
They have to lure you in with the free stock,
and that's
not
going to end tomorrow, the 30th. So make sure you use that link. Do not use a PFOF broker. Okay? Even if you don't use my link, you're helping them, and these guys need to be stopped. This is war.
It's not war.
This has to end.
It's not going to.
Conflict of interest between market.
You might as well just, whatever this means, leave. Because it's not going to end. I mean, you're talking about, he's getting ready to talk about hundreds of millions of dollars. When does that ever just end? When do interests that control or involve hundreds of millions, billions of dollars, when do those just simply cease? Show me an example of that ever ceasing, ever going away, ever really changing fundamentally. Show me an example. There are very few, if any, examples. Yeah, Model 3 Dude says, yeah, but they, that's the second word of the day. First one is blatant. But they will read some rule from the DTCC and miscommunicate all the information in it. They will. Because, and it's a problem, they'll read Rule A, and Rule A will refer to, Concept 1 and Concept 2 and Rule C3 and they don't cross-reference, they don't look at those, they don't go down the rabbit hole. I go down the rabbit hole, for better or worse, because I know that, again, that's where the real important stuff is. And clip off the fucking screenshot, yes, on Ortex even. And they show ads on the screen. Crocs ad. Look, there's a Crocs ad on the bottom of this motherfucker's screen. Seriously. A cookie window. You think he'll dismiss that? What are the odds? This would be a prop bet, an ad hoc prop bet that I would put on my prop bet website. Will he dismiss this cookie notice? Yes or no? Place your bets now. Let's make some fucking money off these idiots.
Market makers and brokerages.
God.
I'm going to link this article as well. I'm going to link this article
he
as
didn't.
well. With some of their fines listed.
No, he didn't.
I'm afraid I'm going to say something wrong. So I'm really not going to say too much, but...
Oh, you already did.
This is just getting to be too much.
Well,
it's
then...
all over Twitter. Of course, nothing's going to be done. As I told you, Gary Gensler, Janet Yellen, they're all in their pocket.
What does Janet Yellen have to do with it?
Millions of dollars before she was put in the position of Secretary of the Treasury. She was paid $800,000 from Citadel for quote-unquote speeches that were done via...
Listen to this conspiratorial bullshit. This guy is a fucking Trump supporter. I almost guarantee you. He sounds like a millennial Trump supporter, which it's really hard to classify Trump supporters as being worse than any other class. But, man, how ignorant do you have to be, you know, I'm sorry, not sorry. It's a sorry, not sorry thing. This guy is a fucking moron. This is all of the cognitive biases. This is all of the logical fallacies, all wrapped into one fucking shit squeeze. Oh my God. Oh my God. He's worse than Shart the Vix. Shart the Vix has been dethroned by shit squeeze.
Zoom during the pandemic. So they...
Yes, he said plandemic. He just said plandemic, which means that he knows about that fucking god-awful quote-unquote documentary that came out a couple years ago with a disgraced scientist who spouts nonsense that makes no sense whatsoever. That means he's not only aware of it, he's still using that term 2 years later. Wow. This is a real fucking winner right here. This is
they basically put her in that position. Now she's one of 4 people who are head of the plunge protection team who inject capital whenever the market's about to crash. Gary Gensler's another member, and then corrupt Jerome Powell, who's the media is now reporting all the corrupt things that he has done, including trading when he shouldn't have been trading, and a lot of other things.
God.
Google it yourself. I've made videos on it. I'll link a video in the upper right corner if you want to check it out.
Did something they shouldn't do.
This is just beyond blatant, beyond an insult. It doesn't get any worse than this. They're literally stealing money. They make a serial killer look like a freaking choir boy. Literally. Remember,
Not
China
literally.
banned Citadel.
Not literally.
Yes, that China.
Oh, here we
cut
go.
Cut your dick off if you look at a girl wrong. That
what?
China.
No, they don't. No, they don't. But I'm gonna borrow a phrase from Paul over on Everything Money. I should just play the clip. You, Shit Squeeze Channel, you are quite possibly the dumbest person I have ever heard. Please, please, for the love of humanity, do not reproduce. Please. Spare us all. Spare us all that, at least. People like this always have kids, though. They
and
always
Citadel
do.
was banned there, yet they're the market maker here. And Kenny G wants to be the market maker for cryptocurrencies moving forward.
Good. I hope
and
he
he's
is.
Doing a lot of other things.
And I hope he steals all of the apes' money there, too.
in tight with the government to be the really a high position for other things, including treasuries. It's really scary. It's really scary. This guy, I mean, He deserves everything that's coming to him. So that's all I'm gonna say.
So do you. So do you.
Hey,
everybody does.
We have to end this now.
Jesus Christ. I don't know. I think this guy might actually be. I think he and Short the VIX both believe their bullshit. I think they both actually believe what they're saying. I'm gonna go ahead and say that. I think they both actually believe it, which is a whole other level of ignorance. Yeah, here's how I found it. Short the VIX, idiot. That's how I found this next clip, which I love. I love this. It's so great. And it's by a channel called Idiotic Investors. Which I wish that I had chosen that name. And they only have 2 subscribers. And I'm one of them. And I'm one of them. So, yeah, and then I left this comment 3 days ago. I need more. So, he's talking to Kringle Kitten. So, Kringle, you're like not as retarded.
Oh, Kringle,
as I am.
I have a question for you. When all of the, because you're in the world, I'm not.
What does that mean?
When all these people are using like basic fundamental analysis to like make investment decisions, isn't that really, really stupid? Like that's just not how the market works now. So when we see all these shorts come out and be like, oh, debt, PE ratio, PEG ratio, like enterprise value, all this
prick.
stuff. Isn't that
he
just
deserves
dumb?
to be flushed down.
Like Warren Buffett has $150 billion worth of cash right now because he can't find anything that's undervalued that he can buy. So he just does some share buybacks of Berkshire. Like, I feel like they're using outdated metrics to try to place invest capital. And I just think that's stupid.
I really, 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 really hope you never procreate because you are the dumbest person in the world. Keep being stupid because when you're stupid, I make more money. And I appreciate that very much.
Like that.
Can you imagine? Like, what an arrogant fucking asshole. That's a kid who has been coddled. You know, in my opinion, I've known a lot of entitled people. That's an entitled fucking asshole right there. You know, that guy, he's never really failed at anything. He always kind of, slides through, counts everything as a win. You know the type I'm talking about. He's never actually had to fucking struggle. He's never had to, fundamentally question everything. That's gonna be a fucking dump. That's gonna be a disaster. That right there is gonna be a disaster. That's gonna be terrible. It's gonna be terrible. But he deserves everything that's coming. Really, I mean they do. I wish Everything Money would talk more about these meme stock pumpers. I really wish they would. He's on timeout in his room. And there are no participation trophies in the market except for, they've tried to make one. And that's the Reddit loss porn. It's a loss porn phenomenon. All of their videos are long, too. That's the other thing. Longish. It's in order. I don't know. I don't think it is. See what this is. See what this is. So
hey, welcome to Everything Money. It's
and
Seth. Mo's here, creepy.
And they're also from Northeast Ohio. Yeah, you know, I've been thinking about that. What I need to do is I need to put together like an outro montage. I think I'm going to do that. Maybe an intro one too. Maybe it would be the same one with that clip and some other things. Maybe a George Carlin clip. You know, there's a George Carlin clip that I wanted to play earlier too, and just a few things like that are relevant to the message. But that's a good idea, though. I'm glad that you mentioned that. Oh yeah, the NFT. Of course, the NFT. That's the trophy. Yes, that's really perfect.
Creepy next.
And they might even get another one.
This is kind of a reaction video. Paul, I told you earlier today that the yahoos out there that are pumping hype overpriced stocks, they're now claiming that people like yourself, using disciplined math to look at some of the overpriced companies out there, you are providing the FUD, the fear, the uncertainty and doubt. And how dare you squelch Ape Nation and all these people that think they're gonna out.
Okay,
they're just gonna beat everything.
This actually is about the apes. That's luck. That's beginner's luck. That's this peak of Mount Stupid. I'll own it.
And value
I'll own it. Come on.
Investing is dead. You're the one that is holding us back. You should be to blame for the FUD, and we can't listen to you, Paul, because these are all going to the moon. And so I want to show you an example here on my screen. The boys are going to listen to this now about
in fairness,
some FUD.
Yeah, but in fairness, they're going to talk about
see, Cleveland.
What everybody's going to perceive as a very obscure time in history, a very random event.
I get excited.
What you don't
over
remember
these
though
things.
is there are
they're smart.
Crashes happen a lot more frequently than people want to remember. You know, and they happen more frequently than people ever expect them to.
Mm-hmm.
Whenever things get very frothy and very expensive like they are now, it's all the more likely there'll be a crash. We're at all-time high levels of valuations on almost every reliable metric over history. And you know, everybody blames real estate for this crash, and there was overvaluation back then too. So let's go see.
And you said obscure time in history. Here we are, obscure time in history.
Yes, correct.
So.
Here you go, folks. Take a look at this.
Google about 3%, but Dell, Intel, Research, and Microsoft are all to the upside. Look how strong.
Did not disappoint. 400 points higher. Yes, indeed. The market's more higher last 30 minutes of trading as volatility once again rules the day.
Most of the text this morning, if not
Maria Bartiromo.
Uh-oh, that sounds a lot like today, Paul.
That was September 29th? Or this is September 29th?
Down 1.7% here, a loss of 37 points or so. Apple shares are just getting hammered this morning.
We're down by between 3 and 4.5% generally across these markets. Let's talk about the speed with which we are watching this market deteriorate. We're red everywhere, essentially, down by 4-5%.
We're down over 16% Dow at the same time.
Oh, Aron, my girl.
18%.
Yeah.
The stock market is now down 21%.
Oh, shit.
We're now down 43%.
What in the world is happening on Wall Street?
Two-year no yields went from 190 to 166 in the blink of an eye.
On the NASDAQ, everything and more has been completely wiped out.
It was the worst day on Wall Street since the crash of 1987.
From the financial capital of the world, the opening bell is going to ring in 5 seconds, and to be honest with you, we wish it wouldn't.
A lot of their customers
Keep going, Paul.
are freaked out, waiting to see how low the Dow will go. They're focused on the Dow, not so focused on OPEC. Yes, OPEC did.
Look at NASDAQ.
Wow. You know what amazes me about this?
Go on.
People just think that the market just goes up and just keeps going up forever. Like, that truly amazes me.
Well,
I don't know
guess-
why it's hitting me right now, and I don't know why it just hit me right now.
Well, one, you didn't live through any major. Yeah, last year was a crash, but it was so quick. You haven't lived through like a long crash. When I say lived through, like you didn't experience it.
But I'm saying I'm expecting something. There's
I
people
know,
that
because
don't
you're hanging around
expect
me. Well, that's exactly what makes it more likely to happen. Is that nobody expects it or nobody's thinking.
Yes.
But there are more people. The value-oriented guys are the ones who are talking about crashes. You know what I mean? And
But in what world of anything do things just go up forever?
Well, that's the thing. When you live in euphoria and you live in an emotional time, on the positive, when things are bad, you never think that's going to end. When things are good, you never think it's going to end. That's the goal of value investing, is that you know that both extremes are ridiculous. You have to make decisions based on those.
Really, you're seeing just broad-based declines across all of the major technology sectors. Apple's under pressure. Yahoo down 8.5%. Cisco 6.5%. Research in Motion 10%.
And we're not getting a bid one, and we're not getting the stop trading, and we see where the buyers are. We're just every day they're pounding it.
The heightened financial turmoil that we have experienced of late
one bald
may well
guy
lengthen
to
the
the next
period of
bald
weak
guy.
economic performance and further increase the risk to growth.
Can't look at it after you buy it. It's so horrible.
But we've had an 8-day losing streak in the Dow that in percentage terms puts it on par, close to the loss suffered in that crash in 1987, close to that percentage loss those 2 days in 1929.
What started in America last year has now spread to every part of the world.
Oh, Lord.
That's how it goes.
Paul, Cramer was just talking about freezing. Did they freeze trading like they do nowadays?
I don't remember. Yeah,
I don't know when they put those rules in place.
They had. I think those had those rules. I just don't remember. Oh no, they put the rules.
We read about that earlier. It was put in place after 1987, as a matter of fact.
It wasn't after.
I think it was after.
I don't remember the exact timeline on when those rules were put in.
Because these Robinhood folks, when they're trading these crazy stocks and they freeze them up, and
they get mad.
They get mad.
Yeah, they do.
They get mad.
In Frankfurt is down by 9%. The Paris market down by 9%. Austria, which was briefly suspended earlier on in the day, is down by nearly 11%.
I love seeing all the companies on the bottom that don't exist. I mean,
that's what I like too.
Yeah,
I like on the big board.
Yeah, like all these companies that you thought were the big bangers. And
I love how they say Yahoo. When they said Yahoo, I'm like, where the hell is
Market is
that?
as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement in oil prices.
And then COVID said, hold my beer.
Yep.
Start of trading at the New York Stock Exchange, and stocks are set to kick off lower, a whole lot lower.
eBay is down 6.5%. And really, you're seeing just broad-based declines across all of the major technology sectors. Apple's under pressure. Yahoo down 8.5%. Cisco 6.5%. Research in Motion 10%.
This could be the most serious recession in decades. And that means life, as most Americans know it, is about to change, in some cases dramatically.
Pause.
Okay, Paul.
So think about it this way. Every major issue that happens, they say life is about ready to change, right? Mm-hmm. And then guess what happens? Over time, life gets back to normal. That's why when people tell me, oh, we're done going to the office last year, you're already seeing people saying, okay, well, we're going to go back to the office, but it's not going to be like before. No, it'll end up being like before. It'll end up being exactly the same as before because people take one event and extrapolate it out across the future, and it doesn't make sense. Right? It's just, we're really going to stop going to the office? Maybe. Maybe we will. I don't think so.
But not on a grand scale.
What was that?
Not on a grand scale.
I actually think we're going to go back to normal here in the next.
Actually, there's
very soon.
There's an article that came out today about JP Morgan. They're going in and they're just buying office spaces now.
I think it'll be a lot different world than what we feared a year. And that's the whole point of value investing. Take everybody's fear and extreme comments and say, okay, what is really likely?
Yeah.
Right?
Yeah.
And that's the bad thing about hype, because if everybody thinks positively, nobody sees the negative, that's when you have a problem. Mm-hmm. The masses see the negative, they've already priced in that negativity, because the masses have already said, I don't want that because of the negative. The masses think positive, what's the upside? Everybody already thinks it's going to be awesome. You can't bid that up as much anymore.
A lot of our patrons were really huge fans of the idea when you said that when we watched a Meet Kevin video and you said, this is why we need a crash.
Yeah, we need to wipe out a lot of adults out there. He thought, when I sent that video to Gary literally said to me, you owe me 13 minutes of my life back.
This is Gary Mashuris.
Gary Mashuris, he said, my favorite part was when he said a conservative 70 PE, or whatever he said. He's like, well, they're at 150, whatever, 600 PE, we're gonna assume 70. 70 PE is a nosebleed PE. He wants the largest, even Apple and Microsoft don't have 70 PEs right now. So I look at these things thinking, that was a great time because stocks were falling and falling and falling. And you see that. You saw eBay at $14. We're buying eBay now. We think it's a value play at anything below 45 or whatever it's at. Yeah. I mean, stocks will rebound. And when these things happen, just like when times are good, they don't last forever. When times are bad, that's not going to last forever. This is an amazing part. And this is why, I mean, this is really good stuff. Whose idea was this?
This was Tim.
Oh, look at you, Tim. Tim's
yeah, eBay's at 70 right now. So Paul,
Do the max real quick on eBay.
eBay's at 70 right now? There's where eBay was. Go later, but it was at 14. Unbelievable.
Look at that, 14.
And guess what? It rebounded. Why? Because the internet's still growing. It's still a good company. Yada yada yada. Just the way it works, guys.
So, in your grand wisdom, are we spreading FUD, fear, uncertainty, and doubt, or what is our goal here on this channel?
I do try to balance myself in negativity versus not being negative. I don't like it when negative people say I'm just being realistic. I'm being mathematical. When you give me a stock that I think is worth 20 and it's selling at 50, and I say it's not worth it, is that being negative? No, it's just not worth it.
Yeah, you're a hater, Paul.
If it's selling at 10, and then I go, well, no, it should actually be selling at 5, and it's like, no, well, then I'm sitting there saying, then I'm being negative. But I sit there and go, yeah, I'm buying it all day. That's what I say about Intel. I like Intel, right? The one I always talk about is Intel because it's so popular. It has great lessons in history and things like that. It's not the only company I like. If I look at Intel going, if I was a negative person, I'd be like, oh, Intel's going to go to the zero. This thing sucks. But I'm sitting there and saying, no, I'm buying Intel. I like Intel. Okay, what's the difference? Well, the difference is my outlook in the future. Negative people don't see a future that's good in any situation. I see a future that's good. Do I think the U.S. 50 years from now will be better than it is today? Absolutely. Do I think the stock market 50 years from now will be better, higher than today? Absolutely. Do I think the stock market 5 to 10 years from now will be higher than today? No. Why? Because numbers show me that. That's just it. I look at history, and over time, America becomes better and better. Stocks go higher and higher over long periods of time. But it also depends on where you start from on the value scale.
And to that end, does that mean that stocks like AMC and GameStop will continue to go up? No, because part of getting better and better is developing new technology. Things change, and companies run the life cycle, and some pivot and change or get acquired or whatever. But so like the nostalgia play on AMC or GameStop, it's not really a valid reason, in my opinion. Just to interject that, but yeah, I agree with everything he's saying. Obviously,
I try to take everything in you say, Paul. In fact, I pulled up Palladium.
If I were investing in a company, they really don't talk about trading too much sometimes, but the other guy, Mo, does more. But you all know that I'm more of a trader than an investor at this point, besides like ETFs.
Volunteer on our free cash, because this is one that just is so overly talked about. And you talk about, we did a reaction video,
Volunteer,
and you sort of shut the video down when you said someone who believes in this, like, doesn't really look at the math, believes in this. And sure enough, I keep looking at this. It's a $45 billion market cap, no PE, no profit margin here. And if we look at the cash flow, Paul, look at this from last year, $97 million in free cash. You have this amount of money probably in your wallet at the moment, and you're definitely not worth $44 billion right now. It's just astounding.
That's funny when you look at it that way.
When we don't understand numbers, we don't understand what makes companies grow, then you have no idea what's going on here, and you just sit there and see a ticker symbol. Yeah, that's fine. By the way, go do it. But I don't want you to cry and complain later saying, the most common thing, I'm going to pick another group of people. The thing I hate the most in this world right now is every realtor I know brags about how well they're doing for their clients.
Yes.
And when they complain about 08 and 09, the economy killed me. Was the economy the one that was boosting you up beforehand? No.
From when they made this video.
So that's the issue. Same thing here. You can't sit here and complain later when a company that made no money and was selling for 37 times sales is all of a sudden worth a lot less. I'm sorry.
Well, it's pretty close.
You have no sympathy for you. If you're not willing to understand history, I have zero sympathy for you. Is that mean? Then I'm mean.
Mm-hmm.
But at the end of the day, this is just reality. This is 150 years of stock market history. This is every great investor of all time would say the exact same things. If you want to ignore that, more power to you. You could be onto something completely new. More power to you. But it's not reality, unfortunately. So for me, it's not reality. So if you sit there and complain about this, there's a lot of people out there on YouTube and in the markets
who will end up being gone at some point in the next 10 years because they would have put all their eggs in these baskets.
Won't even be that long. Won't even be that long.
Because they don't work. Okay, fine. Am I boring? Sure, I'm boring. But I'll be around for a long time, doing this for a long time. And some people would say I'm too conservative. Fine by me. In the real estate world, I think I'm too conservative. I don't know. I mean, maybe I am, but at the same point, boy, I'd rather be conservative and hit my doubles and triples than be fly by night, hit a grand slam, strike out 8 more times, hit another grand slam, strike out 9 more. I just don't believe in that.
We see this transformation with our patrons. They come to us saying that they listen to some of these yahoos following these overhyped companies. This is a lot, Paul. A lot of messages you and I get. They're in our messages, Tim. We see it all the time. Is I lost my ass on some YouTuber telling me to buy some crazy ass stock, and I finally found you guys. So if you found our channel amongst the chaos, we're glad to have you. We will not be a huge channel with millions and millions and millions. This will not speak to a lot of people because they just can't fathom the idea of buying boring stocks that progressively
and
make
there
you
will
win
be
over
a big
lifetime.
crash. When that crash happens, it's going to wipe out a lot of hype stocks, a lot of the stuff, and it's going to unfortunately wipe out a lot of people. That's just the way it is, and that's the way it has to go. Because that's the only way we become better as a country is when we have lessons learned. Just like us individually, you did better when you lost your job.
Yep.
Right? I did better when I had my first real estate deal do poorly. I was able to find other deals around it and make the whole thing profitable and haven't lost money on any deal since.
Said earlier, you have to fail. And God, these guys are so good.
What about when Mo got burned for 27 G's on that one trade, Mo?
Yeah, in like 12 minutes.
Yeah. That'll teach you something.
Learn to put in stops.
If this,
there you go. Model 3 dude.
If you're watching other videos and wondering why all these companies are trying to push on you, penny stocks and just ridiculousness, pre-revenue companies with forward PEs. If you're ever wondering why, you're welcome to join our channel and see how we come up with these numbers, how we come up with what we're paying for stocks. And it might make some sense to you. If it does, we'd love to have you. That's our show.
Okay.
Love you, Paul. Mo, love you.
So there's one more thing that I want to just look at, just a very brief part of that I watched earlier. Actually, I don't know if it's going to show up here. There's some George Carlin. So, okay, I was watching this.
That sense of there is no limit, and that all this expansion, this success, this elan, we're not really going to have to pay for it. Now, of course, that didn't turn out to be true. You could see the crash. Why do you think they called it the crash? I mean, it's really an airborne collapse metaphor. You can't crash if you never left the ground. And it's not like
You can't kill Michael Myers, in other words.
a crack up where you're on the ground and you collide into something else. Rather, it's, the plane fell.
There's one particular...
The 20s had been so prosperous in so many places, not in the countryside. The farming industry was in very bad shape in the 1920s. But certainly in the cities, it was very prosperous. People were making fortunes on the stock market. And then all of a sudden, poof, it went. I mean, economists, very serious economists, had been saying that we'd reached a new level, a new plateau of prosperity in this country, and we were never going to go back. And then the crash happened.
All through the summer of 1929, there had been ominous rumblings. For months, unemployment had been rising. Automobile sales and department store revenues had fallen off sharply. Across the South and West, farms were failing in record numbers. And still on Wall Street, the delirious optimism continued, undimmed. On August 27, 1929, the Dow Jones average reached its all-time peak as an army of frenzied buyers descended on New York, desperate not to miss a single day's trading, swamping the hotels, camping out on the street in front of the stock exchange, and in the tiny graveyard of Trinity Church on Broadway, where Alexander Hamilton lay buried.
What caused the crash of 29 was excess speculation. What had happened was that the American economy as a whole had begun to cool starting in 1928, and the Wall Street economy disconnected from the underlying real economy and became a speculative bubble. And this fueled this speculation that just took off and took off and took off until, again, one day, somebody woke up and said, this has gone too far. There's an old story about Bernard Baruch.
Here it is.
That he had his shoes shined every morning by the same shoe shine boy. And one morning, the shoe shine boy gave him a stock tip. And Baruch went to his office, called up his broker, and said, sell me out. And shoe shine boys are giving stock tips. It's time to get out.
That was the anecdote. When the shoe shine boy gives you stock tips, it's time to get out. And, ladies and gentlemen, I submit that the shoe shine boy is giving stock tips now. I'm not saying it's time to get out, but at least in our favorite stocks, you may not get another chance. You may not. Let's see. I think I talked about everything that I wanted to. I hope so, because that's all the time I have. It's probably more time than I had, to be honest, but whatever. So, yeah. Moral of the story, and I just saw this message. The crypto is starting to dump. That was like several hours ago, so I'm not sure if it's still valid or not. So, okay, it was here. Yeah, it's walking its way down, isn't it? Oh, actually, it was here. It was somewhere in here. Oh, so it, okay. Yeah, who knows? A dump and pump. Dump and pump. Yeah. So, thanks guys for hanging out in the chat. You know, actually, while this song's playing, I might as well refresh this and maybe see if there's any comments. Might be some comments. I don't know. A lot of time. Whoa! Wow! Look at that! Wow! We're going parabolic, as Shit Squeeze Channel said. And no comments that I haven't replied to, except for one from Lynn, that of course will love and like. A free beer. Tomorrow. That's tomorrow. It's tomorrow, Lynn. It's tomorrow. That's tomorrow. So, yeah. We got an interesting rest of the week ahead of us, I think. So, we have a comment. No, oh, okay, that was the wrong one. I'm thinking, like, wait a minute. We have a comment on this video? No, that was the same one I was just on. Interesting rest of the week. We'll see what happens. I think probably check back in towards the end of the week sometime, and we'll go from there. Yeah, this is gonna be interesting. Or not, but probably will. See, the thing is here, I just noticed this. Get over. I think I got a low battery on my mouse too, but it's okay, I'll push through it. So, we're over here, right, over in this area. You come over to this area where it was in that same area. It's a lot of areas, but look at how there's a lot of bigger moves over here. This is December. This was the Christmas present for the apes. So it's interesting to me that in that area, I mean, there's a lot of big moves up and down, but most recently, the area that this stock seems to be moving into, don't want to predict anything, but this could certainly be in the cards. So just be careful if you are attempting to trade this thing. MOAS tomorrow at 2 p.m. Don't forget. I forgot. Lost. That's the word. I had lost the thing, the post for it, but the aliens guy. But if at first you are robbed of a short squeeze, try again. You will succeed. Always. You will always prevail. They try to stop you. And add another 1,000 shares because, that screws over the market maker. So don't forget, buy shares to fuck over Ken Griffin. And, that's it. That's all there is to say. Except for one thing, which I've saved for last, of course. Suspense building. Catch you later, guys. Have a good week.
I'm going to scare everybody in the movie theater. You can't kill Michael Myers! It's impossible! But what you can do is buy AMC stock. Millions coming, baby. AMC stock. You want to be a millionaire? AMC, I'm an ape. They call me the ape father, baby. You can't kill Michael Myers, but you can become a multi-millionaire, baby. AMC in the house. Wow! I'm going to scare everybody in the movie theater. You can't kill Michael Myers. It's impossible. But what you can do is buy AMC stock. Millions coming, baby. AMC stock. You want to be a millionaire? AMC, I'm an ape. They call me the ape father, baby. You can't kill Michael Myers, but you can become a multi-millionaire, baby. AMC in the house. Wow!
Oh my God. You know what I want to do? Shit. I'm going to do a video on this. This is my favorite one. My favorite dub over of this right here. I think it's... This needs to be done.
Ya para abrir el restaurante que era el arroz. Y me llama el cocinero. Risita, ¿qué? Ve por la paellera. Venga, que a las 2 de la tarde ya están aquí. Miren, bañador. En las chanclas. Todo despeinado porque no me dio tiempo nada ponerme las chanclas y el bañador. Voy a la playa, había subido la marea. Tú, había subido la marea y encontré una paella. Y la encontré porque estaba la paellera agarrada, metida entre las piedras de Chipiona, del faro. Y cuando entro en el restaurante me ve el cocinero con una paellera y adentro la vende paellera. ¡Ay, llama para Sevilla! ¡Llama a Sevilla que traigo país! ¡Es tuyo con el bañador! ¡Con el bañador y con la paella! No veas, para Sevilla. Y al último, que cuando ya salió la bien de regla, estamos llorando los dos. Me cobró el tío la paella. Me cobró a 500 metros la paella. Y ya no fui más. Me fui andando a coger los amarillos hasta hoy. Me manda por la noche, había bajado más el agua y me había subido. Cualquiera estaba donde está la paellera, a lo mejor está en el barco ese del petróleo.
En el Prestige.
En el Petriense. Y ya no otra vez más la cocina. Ya aborrecí la cocina. ¡Ay! ¡Ay! ¡Ay!
Yep. Exactly.
No cobré nada, me dieron el dinero del bote.
¿Había mucho dinero en el bote?
Lo que me echaban y el dinero de lo que gané.
Former AMD engineer.
A 500 caras, pues viste lo que me llevé yo para Sevilla. Ay, ya aborrecí la playa. Ay, hemos llorado los dos. Ya está, tú, no es para tanto, yo. A ti yo no quiero arroz, Jesús, yo no quiero arroz ni en China, vamos.
I'm going to do one of those for AMC. I think or Ken Griffin, Citadel, something. Might get some play. Anyway,